Welcome, my dear friends. So today we are going to start a marathon for your Group 2 Management Accounting. In Group 2 Management Accounting, always students have a fear. In the book, they are coming with a lengthy sums, how to approach the standard costing, how to approach marginal costing. So all these solutions are discussed in our marathon session, where we discussing topics such as standard costing, previous year, all the sum and marginal costing, bigger sum, all are discussing in this. So you don't want to worry. So we directly go ahead with our question. So let's start the marathon. All the best, my dear friends. So please subscribe our channel for getting the marathon updates very fast to you.
Now, my dear friends, we are moving to the next topic, marginal costing. See, marginal costing is one of the highest weightage. This is consists of lot of subtopic. Subtopic include decision making, CVP analysis, make or buy decision, key factor analysis. Lot of concepts are included in this marginal costing and decision making techniques. See, in this revision session, I want to highlight two things because we are nearer to the exam. This revision session, I want to give a better strategy. See, listen very well. I am for me, I have with my December 24 recent CMA intermediate examination question paper. See, if you take any exam paper of your 22 syllabus, the questions are coming like this. Question number 2A will be generally will come as a 14-mark question like this. They will come. This is 2A. 2A will come from theory already, you know. 2B, ABC. So 3. Question number 3 only marginal costing start. This always it will be 14-mark essay question. 4A, again marginal costing question, 7 mark. 4B, again marginal marking question, 7 mark. That means 28 mark. After this, 5 standard costing, we have already done the revision, we done the problem. 6A, again standard costing. Sometimes this will change. Again, we did this question also today. So we have B, this is on budgeting chapter, 7 mark question. Then we have again 7 mark question on EVA, again 7 mark question on learning curve, again one 7 mark question on decision theory. You identified all these points. Two area only you are getting 14 mark question. That is one is from your standard costing, another one from what? Marginal costing. Someday budgeting also will come. I am going to tell you a very good strategy, my dear friends. I am telling you a very good strategy. See, the strategy is nothing but question number 2A, that is 2A, first question A will be theory, that is from our introduction chapter. What is management accounting, different between management accounting. So what you have to do now, question number 2A, that small theory you have to learn, management accounting theory. ABC you can score, so 2 over. Question number 3, my dear friends, I am telling revision strategy. If you want to write your exam within 3 hours with full confidence, I am suggesting you this third question you can take in your choice question and you can write marginal costing 4A and 4. This is the best strategy. That means that 14 mark question easy only. If your answer is correct, you will get 14 mark. But the problem, you know what? In the regular class also, we did all these kinds of 14 mark question. Reading the question itself will take 20-25 minutes. And you know, all these 14 mark questions are coming from out of study material question. If you take December 23, June 24, December 24, none of the questions are from study material. So if the questions are not from study material, if it is study material ditto question, for us it will be easy. We have taken a lot of questions from CA final, so there's a chances of coming for your exam also. But I don't want to take any risk in this revision session. So revision friends, if you want to manage the timing, this third question, you can even good for what? Choice. But we have to learn marginal costing, everything. We are going to revise marginal costing in depth now. So if it is easy question you feel, you can solve it. We are going to do 14 marks revision also today. But exam perspective, you see the things, 1.5 page are the question paper. So if you read this question, understand and solve it, it will take more number of time. By the time you could have been complete 2 option question. That means you can solve third question. Then you can go for second question. Third, you can go for choice. Fourth, fifth, because standard costing at 14 mark is like sixth, seventh. You got 5 questions. Or if you are feeling that your 2A is a tough question, you can go for 8th question also. responsibility accounting, one theory, and another question from decision theory. So this is a best strategy, my dear friends. So you can take a lot of rest, effort, less are there. Because we have choice, so we have to utilize that effectively. So in this revision also, though we are solving 14 mark question, the beginning of the session, we are going to focus on, the beginning of the question, we are going to focus on 7 mark model question for you, all our previous year question. So standard costing, uh, now going with the marginal costing, we are starting, my dear friend. So I know you are ready. I am also ready, my dear friends. Let us go with the question. We are doing a recent question. All are your 4A, 4B questions. So we are going to do all the 7 mark question on marginal costing which came for exam. So with your permission, we are starting because 14 mark. Apart from this 14, you can get a MCQ 2 mark, 2 or 3 MCQs. So minimum 20 mark also you can able to score if you go with this strategy. If you are lucky, 14 mark also you can able to score. Then 30 plus mark you can score from this chapter. So Srigar Limited provides you the following data for their ended 31st March 2025. This is 25 only, small printing mistake in your exam also. It is 25. Selling price is given, material, labor, variable overhead and fixed overhead is given. Sri Lanka sold 2000 units in 2014 and 25. In 2025-26, the selling price per unit will remain same. Selling price will not change. Direct wage will increase by what? 20%. Fixed cost will reduce by what? 6,000. So fixed cost will reduce by 6,000, and the total variable and fixed cost will be what? For the next year, it will be what? 2025-26. It will be what? 1,14,000. First, they are asking what is the profit per unit for what? 2024. That is existing profit. Next, they are asking if you want to sold 25-26, what is the maximum profit? So I hope all of you are able to recall the basic formula of your standard marginal costing. So please, you can pause the video and you can revise your basic formula. Since it is a rapid revision marathon and want to go with formula, so we are going directly with the question. So we'll go with the profitability statement. So what is the profitability statement, friends? So we'll go with the profitability statement. We have the sales. How many units we are selling? 2000 units. What is the selling price? Selling price is what? 200 rupees. Less cost. We can take material and labor together. We can save time. 2000 unit into 130. Variable and fixed overhead cost. So what is the variable and fixed cost? 1 lakh. No other cost. So this is what is called total profit. So what is the profit per unit? They were asking you the profit per unit. So per unit, what you have to do? 40,000 by 2,000. Easy. 7 mark question always will be easy. You will get what? 20,000. Now you should know what is your. You should know what is your fixed cost, so that you can able to complete very easy. So this is a profit statement for which year? 24, 25. Now we will find out contribution per unit for next year. That is, then only we can able to get the data contribution. So what is the selling price? Selling price is not changing. It will be remain same. Less variable cost. What is the material cost? Material cost no changes. So material is 100 rupees. What is the labor cost? Labor cost is changing. Right now it is 30. It is going to increase by what? 20%. So it will be what? 120%. So you will get 36. What is the variable overhead? This we have to find out. If you find out, then only. That is the only twist in this question. You have to find out the variable overhead. See, how can you get that variable overhead? Very easy. At a 2000 unit, what is the total overhead? At a 2000 unit, total overhead is 1 lakh. At a, now you are selling 3000 unit. If it is 3000 unit, at a 3000 unit, what is your total overhead? Total overhead, they are telling that 1 lakh 40. Very, very important. This is after fixed cost is reduced by what? 6,000. So we have to do, if you want to compare, we have to do before reduction. So if it is, that will be, you have to take 1 lakh 50. That means 1 lakh 14 plus 6,000. Why we add 6,000? Because if you want to do change in cost by changing unit, you should not change the price effect changes. It should be taken both same day. So now you can go for our indifference. That is, at 3000, you can get what is a variable overhead per unit. How can you get change in cost, which is 20,000 by change in unit 1000? So what you will get? 20,000 by 1000, you will get 20 rupees. How you got 20,000? 1 lakh and 20,000 difference 20,000. How you got 1000? 2,000 and 3,000 difference only 1000. So you will be able to get that 20 rupees. So variable overhead. Now if you want fixed overhead also, we can find out fixed overhead for 24, 25. This is for the previous year. So what will come? What is the total overhead for 24, 25? Which is 1 lakh less variable overhead, which is 20 into the 20 into how many units? 2000 unit. So this is the fixed overhead. So now what is the fixed overhead for 25, 26? There is a reduction of 6,000. So 60,000 minus 6,000, you will get what? 54,000. So my dear friends, this 4A, 4B is easy question. If you practice good number of question, you can do. Key factor question, you can easily score. Key factor, there is no reason question, so we are not practicing the revision, but in the regular class we did lot of key factor or limiting factor question, so you can go for revision of the same also. So 54,000 is the fixed overhead. So variable overhead you got 20 rupee. So what is the contribution you get? So this is the revised contribution per unit. What is that? So 44. Now we are going to give the end. What is the answer? They are asking, determine the unit to be sold in order to earn same amount of profit per 24, 25. So what is the number of unit you have to sell? You don't know what is the number of unit. But that number of unit you should get what? Same profit. What is the last year profit? 20 rupees. Last year profit is what? 20 rupees. So you have to go for reverse calculation. That is, your number of unit is equal to, that is, we have discussed one concept called a desired sales in units is equal to F plus P by contribution per unit. You know this. Desired sales. So desired sales we don't know. Desired sales we have to find out. What is the F? F next year is getting reduced to 54,000. What is P? P per unit we know 20. How many units we don't know? That is X only. So 20X. Divided by contribution per unit, which is 44. So if you solve this cross multiplication, X into 44, you will get 44X equal to 54,000 plus 20x. So x will be what? 54,000, or we'll make it for 24x is equal to 54,000. So what will be the x? 54,000 divided by 24. What is the answer, friends? The 7 mark question is over. That's all. So this is how you have to approach. It's not little more advanced, but we have very interesting questions always will come. Study material without question also we can able to work it out. So hope all of you are clear. So please take your own time and copy. So we are going to solve as many questions from marginal costing also. We are going to solve as many questions from marginal costing also. So please take your own time and complete, friends. So, hope all of you completed. Now we'll go for next question. Next we'll go for the very easy question. June 24 question. They're asking for with a break-even point, margin of safety and all. This kind of direct question also will come, but generally small twist may be there in this question. It may not be the same as it is like your group one. So R&S Limited, a manufacturing company, has introduced a new product and marketed 20,000 units. The variable cost and profit for the product is 20 per unit and 4 per unit respectively. The fixed overhead is 3 lakh 20. You have to compute what? Break-even point in quantity, margin of safety in amount. See the point, they are very clear. Break-even point you can do in units and in rupees also. So they are very clear, you want to do in quantity. Margin of safety in amount. See the confusion how they are doing. Margin of safety is profit is 64,000. So first we will do this both question. So first of all, most point, fixed cost is given already in the question 3 lakh 20. So you don't want to take any effort telling variable cost and profit also given. So the only point is that question is silent for selling price. Because if you get the selling price, then only you can get contribution per unit. So how can you get selling price? Reverse calculation. We have to go for reverse calculation. What is sales? It's equal to variable cost plus fixed cost plus profit. Correct, friends? So your total sales will be you have 20,000 unit. So 20,000 unit into variable cost is 20 plus fixed cost is 3 lakh 20 plus profit again 20,000 into 4 rupee. Can anyone tell what is the answer? So what is the selling price per unit will be 8 lakh by 20,000 unit. Hope all of you are clear. You will get what? 40 per unit. Hope all of you are clear. 40 per unit. So what is the contribution per unit? 40 minus 20. Your variable cost also 20. So contribution per unit is what? 20. Now you can approach whole formula. What is the first point? Break-even point in units. So hope all of you revise the formula. Break-even point in units is equal to fixed cost by contribution per unit. Fixed cost is 3 lakh 20. Contribution per unit is 20. So what is the answer? 3 lakh 20 divided by 20, you will get 16,000. Next, they are asking margin of safety. So we will do PV ratio. What is PV ratio, friends? PV ratio, you have to do contribution is what? 20. Selling price is what? 40 into 100. So your PV ratio is what? 50%. PV ratio is what? 50%. That is selling price we got 40, variable is 20. So what is the, they were asking margin of safety. Margin of safety in rupees. The formula is what? Profit by PV ratio. Otherwise, you can do per unit contribution, you can multiply with a selling price. That is also you can do, but we will do for formula ways. So what is the profit? Profit is 20,000 into 4. So tell my dear friends, 20,000 into 4, what you will get? 80,000. So what is the margin of safety? 80,000 by 50%. You will get what? 1 lakh 60. Same way, I request you to compute. Come on, friends. Next, they are asking what is the profit margin of safety? Profit is 64,000. So again, the same way, margin of safety. They're not asking is rupees, so we'll do in rupees 50%. Answer is ready. Next is what? If selling price is reduced by the company by 10%, demand is expected to increase by 5%. Impact on profit, break-even point, and margin of safety. So if selling price is reduced by 10%, so you can able to go for revised selling price. Right now it's 40 rupees. Reduced by 10%, it will become what? 36,000 unit. So what is a revised sales? Revised sales will be, they said very clear, it is increased by 5,000. So 20,000 existing plus 5,000, it will become what? 25,000. It will become what? 25,000. So your revised sales will be what? 25,000. Now they are asking you to find out what? Impact on profit. So we can go for statement of profit. Sales 25,000 into 36 less variable cost. We know variable cost will remain same per unit. So you will get contribution less fixed cost. We know fixed cost will not change. So you can go for profit. 25,000 into 36, 25,000 into 20. Fixed cost is remain same, which is 3 lakh 20. You will get a profit of what? 80,000. You will get a profit of what? 80,000. So what is the PV ratio? They are going break-even point again in quantity. So we can do revised contribution per unit, which is 36 minus 20, 16. So what is the break-even point in units? Definitely it will change. It will be increased. Fixed cost, nothing changes. The silent on fixed cost. Fixed cost will remain same. So fixed cost by 16, your number you will get it. So congrats for those who got the correct answer. So what is the margin of safety? Margin of safety without PV ratio also you can do. I'm going to show you that margin of safety in amount only asking. We can go for PV ratio method or units we can find. I'll tell one more new method so that you can able to get clarity now. Margin of safety is equal to profit by contribution per unit. You will get units. This is units, but they are asking you to compute what? Margin of safety in rupees. So 5,000 into 36,000. So you will get the answer. So this is an alternative method you can do. Otherwise, we can find out. Otherwise you can able to do total sales value. 9 lakh 80, but your break even point you have only in units. You can convert 20,000. This is also reverse way. 36,000 you got it. So 7 lakh. See 9 lakh minus 7 lakh 20 you will get it. So three method you can do. See this is also very important. Break even point plus margin of safety is equal to what? Total sales. So any method you can able to do. But they are asking very tricky units rupees. So what they are asking in that method we have. If question is simply asking break-even point and margin of safety, you can do in rupees. Don't want to do both. If information is only for units, you can do only units also. Clear? So this question also completed. So this is how we have to approach. Come on, friends. Yes. Now we will proceed with the next question. I know all of you are ready. So these are all the previous year 7 mark question. This is another 7 mark question came for December 24. So that means 7 mark question of marginal costing us various scoring area we can easily able to crack. So Acona Limited manufacture two type of mobile phone, XB and YB. Due to severe competition, it has to reduce the price for the next period. The following information are given below. Selling price right now 10,000 and 12,000. PV ratio 25 and 30. Product specific fixed cost. That is XB fixed cost is 10 lakh, YB 15 lakh. Next period, as we discussed, selling price is getting reduced. For the next period, company want the same PV ratio to be maintained. What is the PV ratio? 25 and 35. The same has to be maintained to achieve. They want to achieve a break-even point also given. So break-even point is what? 400. So reverse calculation. It is assumed that number of units sold X and B to break-even as well as total number of units to be sold during the year are same. So units sold and break-even are same. So what is the current unit sold? Your break-even. So if you get your break-even sales, that is only your current year sales. So analyze the cost reduction program. That is reduction in fixed expense. So definitely, if your selling price is reduced, you want to maintain same PV ratio. You have to reduce another cost called a fixed cost. If variable cost is reducing, one element. So variable cost is not reducing, only fixed cost only reducing. Shall we start, friends? It's a very tricky question, reverse calculation question, superb question. So let's start. We can complete very fast. So we are doing the question number 10. So let's start. Ready? So we'll go for the question number 10. So what is the information? We'll have two data. So what is the contribution per unit for XB? 10,000 into, or else we'll go directly shortcut method. What is the variable cost? See, if 25% is the PV ratio, variable cost will be what? 75%. So 10,000 into 75%, 7,500. And what about YB? 12,000 into, see, 30% is the PV ratio. If PV ratio is 30, variable will be what? 70. So we done a shortcut method, but hope all of you are clear. This is the current variable cost. Now we are going reverse calculation. We are going with the reverse calculation. What is the reverse calculation? You want the same PV ratio. Same PV ratio. So you know what is the formula for break-even point. Break-even point in unit is equal to fixed cost by contribution per unit. So you know what is the selling price. Next year selling price is 8,000. Here the next year selling price is 9,000. So what is the contribution per unit? Selling price minus variable cost. Variable cost will not changing. Only contribution only changing. Sorry, selling price only changing. So you quote point. Now we get the one. Break-even point is equal to fixed cost by contribution per unit. They said that break-even fund, both the product is what? 400. Both the product is what? 400. So answer will complete in 4 lines. So we are going to do fixed cost for XB product. How it will be? Break-even point is 400 unit. Fixed cost we don't know. Contribution is what? 500. So what will be the revised fixed cost? 400 into 500. What is the number? 400 into 500. One second. So, my dear friends, actually, this 2000 is our answer only. So, we can go one proper working note. That is, they're telling one additional one condition. That condition also we have to maintain. What is the one condition? That is, company want current PV ratio to be maintained. Company want current PV ratio. Since company want current PV ratio, I will tell reverse calculation. That is 2 lakh is correct, but we'll go reverse where that is selling price we got. PV ratio same we have to maintain. So what is the PVR? Same friends. Question specifically tells you want to maintain same PV ratio. Actually, you can't maintain the same PV ratio because your variable cost will remain same. But you have to reduce your fixed cost to manage this point. So what will happen? See, generally the contribution what we did is correct only, but because of the wording called PV ratio has to be maintained. So what is the contribution formula? Your selling price into PV ratio. This formula you have to apply. So, so what about the previous formula? Is that correct? That is also correct if the question is not silent on this current PV ratio. They tell that you have to maintain this PV ratio. Your contribution you have to take what? 2000. So 400 unit, same 2 lakh you will get it. Contribution will be 2000. So 400 into 2000. Answer is over, friends. So 400 into 2000, 8 lakh. What is the existing fixed cost? Existing fixed cost is what? 10 lakh. See, same thing. So what is the reduction in fixed cost? 2 lakh. 2 lakh we get. This earlier we get shortcut final answer correctly. So this is the proper way. Step by step route. If you do, this is the way. Now what about fixed cost for YB product? Same way we have to approach. Fixed cost for YB product will be 400. Both the product break-even point same. See, break-even point for both the product 400. Since both the product 400, you have to approach the same way. So 400 units is equal to fixed cost. We don't know. Unit is 2700. So your fixed cost will be what? 400 into 2700. What you will get? 400 into 2700, 10 lakh 80. What is the existing fixed cost? Existing fixed cost is nothing but 15 lakh. So what is the reduction in fixed cost? 15 lakh minus 10 lakh 80, you will get 4 lakh 20. So we have done one of the shortest method. Your ICMA study will then complicated method. For you, we have done a shortcut method. So this you can do in the shortcut method. So this is how we have to approach. So congrats for those who got the correct answer. So we can get that in a easiest method. Correct. So this is the proper way we have to do it. So hope all of you are clear. So please take your own time and copy. So the point is what? See, actually, if this is the variable cost, this will change. But the question is telling that PV ratio has to change. That is why I have done this format. So shall we proceed for the next question? So hope all of you are ready. With your permission, we'll proceed for the next question. So question number 11. Similar question is also in our workbook also or final book also. So let's start. Very good question on capacity. This is came for June 24. So Kautilya Limited currently working at 18% capacity has the following particulars. Sales 48 lakh, material 15 lakh, labor 6 lakh, variable overhead 3 lakh, fixed overhead 90 lakh. So all the information is given unless profit. So right now they are at 80%. An exporter has been received to utilize half of the capacity of the factory. The order cannot be split. Either it has to be taken full and executed at 10% below the normal domestic or rejected totally. The alternative available, reject the order and continue the domestic only, that is present level. Or accept the order, split the capacity to 100 between overseas and domestic. That means overseas you take 15, total you can go for 100 only. So overseas 15, balance domestic you have to go with 50 only. Though you have 80, you have to reduce the domestic sale. That is what they tell the wording called it. Turn away excess domestic. It means domestic 50, export 50. Increase the capacity. It means 100, 80 plus 50, it has to go 130. 80 plus 50, it has to go what? 130. So increase the capacity so that you can accept the export order to maintain the present level. How you can achieve 130? Buying an agreement which will get 10%. So 100 will come 110. Still not sufficient. Working an overtime to meet the balance, but you have to pay 1.5 of the wage for them. You have to pay extra wage. Prepare a profitability statement and suggest. It's a very good question, but I feel 7 mark is not justifiable. We take little more time. 7 mark. All the questions we did now are very less. This is also lesser only, but 7 mark is not justifiable. But anyway, good. We can complete within 10 minutes. Shall we start, friends? So we'll go forward. Statement of profitability. Statement of profitability. So we have 3 options. What are all the 3 options, friends? Reject the order, that is 80% only. Next time, accept and split. Accept and split. That is 50% and 50%. Next is increase capacity. That means already you are going at 80%. Now go with 50%. So totally you go with what? 80%. So hope all of you are ready. Let's start. We can able to crack this. So what will come first, friends? First, sales, domestic, export. Here reject the order, so only domestic will come. So what is the domestic? Just copy paste 48 lakh. Here also same 48 lakh. Here what happened? Domestic you turn away. 80 you come down to 80 you come down to what? 50. So 80 if this is the revenue, for 50 it will reduce it. Logic clear? 80 if it is at 50 it will reduce it. It will not change because you are going with a 80% only. You are going with a 80% only. This is for domestic. Here there is no export. Here we have a export. So export very important. How you will get? This is for 80. What is for 50? This is for 80. What is for 50? And very important point. They tell very clear. Domestic we are selling at what? 10% below the rest. We are going at what? 10% below. So it will be only what? 90%. It will be only what? 90. So 10% below the price, it will become what? 90%. So hope you are clear because the price is getting reduced. So if you want, I can make the export sale working here. That is 48 lakh is 480. What will be 450 into 90%? You will get what? 27 lakh. So I have given the working note also. So here 30 come down to 27 because you are selling at a lower price. So this is the sales value is over. Now you have to take all the cost, material, labor, variable overhead, fixed overhead. So what is the material, friends? For 80% material is 15 lakh. See, we are lucky. Question is silent on no, nothing. We did in the class 14 mark question where material price also changing. But here nothing changes. You can go through our study material workbook, special order pricing or export pricing. We did similar 2-3 model question. But here no changes. So very easy. 15 lakh is for 80. What is for 100? Similarly, 18 lakh is for 100. What is for 130? Are you able to understand? This is how you have to do. Labor also, same way we have to do. We have 6 lakh. So 6 lakh is for 80. What is for 100? This we will do later because there is an adjustment of what? Overtime is there. Because the question tells that in order to achieve the capacity, there is an overtime is there. Variable overhead also we can do very easily 3 lakh. So hope all of you are clear. 80, what will be for 100? This is for 100, what will be for 130? You can do like this also. This is for 80, what will be for 130? All will get correct answer. So fixed overhead only the main important point. Lot of changes are there. So before going to the fixed overhead, I will go to the direct labor at 130% capacity. Direct labor at 130% capacity. What speciality for labor? Here, after the 100, 10% you are going with a increase in capacity. This will result in increase in fixed cost of what? 1 lakh 50. So you can go for current fixed cost is what? 90 lakh. So you can go for existing fixed cost of what? 90. This will be same in all the case because fixed cost will remain same. Here there is an equipment. This equipment, if you bring it, they said that it will increase the capacity by 10%, which will increase the fixed cost by 1 lakh 50. That will come under only last option. Why that is comes only under last option? Because they are only increasing the capacity. 80 you are not increasing, 100 you are not increasing. So beyond 100 only it will come. So what percentage you are increasing? Only 10%. That is beyond that what you have to achieve. You have 130 you have to reach. 110 only you have reached. That means balance 20 also you have to reach. So question tells that how you are achieving the 20. Work overtime to meet the balance. Then you have to pay labor extra 1.5 of the normal. Normal what you pay, you have to pay 1.5. That means labor how to do direct labor up to 110 percentage without overtime because we know here no overtime. Overtime you have to pay what beyond 110 because up to 100 normal only no overtime. 10 is because of the capacity of the machine. So balance only overtime. That means balance 110 onwards. So here without overtime. So what will be the labor? Normal labor is 6 lakh. That is for 80. So what is 410? 6 lakh is for 80. What is 410? 8 lakh 25. Now, balance 20%. How it will be? That is 6 lakh is for 80. What is for 20? You have to pay not normal. Generally, normal like 20 only. 1.5. That is 1 rupee you have to pay 1.5. Extra you have to pay 1.5. So that changes will come. So 6 lakh by 80 into 20 into 1.5, 6 lakh 25. total it will come what? 2 lakh 25. So 6 lakh by 80 into 20 into 1.5 percentage. You will get a good number called it 2 lakh 25. Here you will get what? So total labor will be 10 lakh 50,000. So you got all the data. Anything else we have, friends? No other details. All the details we have been taken. So now you can able to go for your total cost. You have to add all the cost. You will get your total cost. Now you can go for your profit. What is the profit? Your sales minus cost. Your sales minus cost. See, that's all. Answer is over. So this is how you have to approach the question. Similar question we did, but number is changing. But what is the decision here? Higher the profit, better the ranking. Decision is very important. It's a decision making question. So you can go for ranking. So you can go for the highest profit you are getting in which option, friends? Increase the capacity. The highest profit you are getting in which case? Increase the capacity. So you can use the comment that increase the capacity to 130. So please take your own time and complete, friends. This is how you have to approach this type of questions. So labor computation is a very good point. Export sales computation also very good point. Now, my dear friends, we'll go with another interesting question. Came for June 2023. Similar to our December 24 question. So BLB Industries provided you the following information: sales, raw material, everything in rupees. Units sold is 200. In the next financial year, they expect the following: wage will increase by 50%, fixed cost will decrease by 1,000. Number of units sold in the next year is what? 300. Total fixed and variable overhead in the next year will be what? 12,000. How many units are required to be sold in the next year so that same amount of per unit in 2023 can be achieved? So here no need to make a lengthier calculation. So what is the profit per unit? See, we have 4,000 for 200. So 20 per unit. Same thing only we got 20 only for December 23 question also we got. Now we have to get the revised cost for the year variable cost. So revised variable cost. What is the variable cost we'll get? Material. Material, are they telling anything? No. So material will remain same 20,000 by 200. So what will be the number? 100 rupees. So we got material 20,000 by 200. What is next, friends? Wage. Direct wage. Wage one, which is what? 6,000 by 200. But there is an increase of what? 50%. So 6,000 by 200 into 50%. It will be what? 45. Now you have to identify the variable overhead. Variable. So the same way how you did for December 24 question in this marathon, you have to revise it. That is at a 200 unit, total overhead is what? Total overhead is what? 10,000. At a 300 unit, total overhead if no changes. See, they said next year will be 12,000. This is after a decrease of 1,000. If no decrease, we have to consider. Then only you can able to compare it properly. We discussed that logic already. That is, if you want to compare change in cost by change in unit, the parallel will should be the same thing, same way we have did for December 23 question also. This question, see, 2000 unit, 10,000 at 3,000 we have. Here it is decrease, so we added. Here also decrease, so we added. Okay, so now you can get it. What is a variable overhead per unit? How can you get change in cost by change in unit? What is the change in cost? 13,000 will you get 3,000. Change in unit is 100, so you will get what? 30 per unit. How can you get fixed overhead? Total overhead at a 200 unit is what? 10,000 less variable overhead. What is the variable overhead? 200 into 30, which will be what? 6,000. Your fixed overhead will be what? 4,000. What is the revised fixed overhead? Fixed overhead is going to reduce by 1,000. So revised fixed overhead will be what? 3,000. Correct? So your variable overhead will be what? 30. So this is your total amount. This is what your total variable cost. So what is the selling price? Next financial, expect the following number of units sold in the next year. So selling price, nothing is mentioned. So selling price will remain same. So selling price per unit will be what? Which is 40,000 by 200 unit. 200. So what is the revised contribution per unit? It is 25. Now you can go for our formula. Desired sales in units. F plus P by contribution per unit. Desired sales you don't know. F you know, which is 3,000. Profit per unit you want 20. So 20x divided by contribution per unit is what? 25. So cross multiply. 25x is equal to 3,000 plus 20x. So 5x is equal to 3,000. So your x will be 3,000 by 5. You will get an answer called what? 600 unit. How easy, friends? So this is how you have to approach. So hope all of you are clear. You can easily able to complete. You can easily able to complete. So this is how we have to approach the question. Now we can proceed with the next question. Similar to our, we'll do an MQP question which came for MQP June 25. So it's also a previous year question. In the regular class session also we discussed this question, a very superb question. Susama Product Company Limited manufactured and sold in a year 15,000 units of a particular product, fetching a sales value of what? 15 lakh. Fetching a sales value of what? 15 lakh. After charging direct material 30%, variable overhead, and company earn a profit of 15.67 per unit. The existing equipment can produce maximum of 20,000 units. In case of exceed the output, the new equipment has to be required at 10 lakh with a lifespan. Just like our last question, last before question, where we did 130 like that question. A prospective customer is willing to order quantity of 10,000 units yearly, regularly at a 90% of the present selling price, which will be accepted over and above existing demand. See the point very clear. See, your capacity is 20,000. Right now you are selling how many units? 15,000. That means your idle capacity or a balance capacity is what? Idle capacity or balance capacity is what? Only 5,000. That is 20 minus 15, only 5,000. But the company get an order for what? Another 10,000. So you know, obviously you cannot be able to fulfill 15 plus 10. You require what? 25. Balance is only 5, but you got an order for 10,000. So what is the problem? The problem is that irrespective of the order, the cost is increasing, material is increasing, labor is increasing, fixed order is increasing. So if you want to order 10,000, definitely you have to increase the capacity because 15 plus 10, 25% increase the capacity by another 50,000. So you have to increase by what? Another 15,000 rupees fixed cost. You have to recommend which is the best offer, or otherwise we have one more offer. So one is do not accept, accept. Now third one option is coming. You can go for a sales drive to sell the balance unused capacity. Tell my dear friends, what is the balance unused capacity? 20,000 is your capacity, 50,000 you are selling. So balance unused is what? 5,000. That you can get a cost of what? 60,000 only. So you have to eliminate the financial cost. You have to identify the profit, best option. So best option, what you have to do? You have to prepare just like how we did previous to previous question. We have to we did this question same way. You have to prepare the statement of profitability. So maybe this MQP also this kind of question is coming. So this kind of profitability question can also expect for your exam. So statement of profitability. So first case, do not accept. So you will go for what? 15,000 units. Next you will go for what? Accept. So 10,000 plus 5,000, 15,000 plus 10,000. Next is sales drive, which is 20,000 units. Correct? Sales drive how 20,000? 15 plus 5. This 15,000 existing. So what is the sales? Your sales existing is what? 15 lakh. So 15 lakh is for 15,000 unit. What will be for 20,000? Normal point. 15 lakh is for 15,000. For 20,000 it will be what? 20 lakh. But special order we are selling at a discount. So special order value at we have to find out how. If 15 lakh is for 15,000, what will be for 10,000? They are selling at what? 90%. See the point? You are selling at a 90% value. So 90% only you will get it. So what will be the amount? 15 lakh by 15,000 into 10,000 into 90%. You will get 19,000. So if you accept it plus 90,000, you will get 9 lakh. So I'm not given the breaking in the table. I have given that directly here, but the working is given here. I hope you are clear on how you go 20 lakh. 20 lakh is nothing but 15,000 unit, 15 lakh now. 20,000 unit is what? 20 lakh. Now, less cost. Cost and all we'll find out specifically. So, existing cost structure. What is the existing sales value? 15 lakh. Less profit. 15,000 unit. Profit of what? 16.67 rupees only. So 2 lakh 50. What is the total cost? Now less other cost. Material. What is the material cost, friends? They said everything in the question. Material is 30% of the sales. So what is your sales into 30%? So your sales into 30%. What is labor? 20 percentage of sales. Very easy. What is next? Variable overhead 10 per unit. So you will get 1 lakh. See, fixed cost, they are not telling anything. Fixed cost, they are not telling anything. So what you can do? Very simple. If you less all other cost, balance will be the fixed cost. Balance will be the fixed cost. This is your total cost. If you reduce all other costs, balance will be the fixed cost. You will get what? 6 lakh 25. How interesting is that? Now you can approach this tab. See, the reason we are doing existing data because they are telling that whether you accept or do not accept, all these costs are changing. Whether you accept or do not accept, all these costs are changing. That is the reason we do like this. There is no twist of overtime and all. So that and all you are very lucky. But this is also 7 mark. That is very not fair. It will take time, my dear friends. That is the speciality of marginal cost. That is why I told you have a strategy that you can go for other option where you can score good mark. Now let's start. We will go for direct material. See what happens to direct material. There is an increase of 10%. Right now your material is 4 lakh 50. There is a 10% increase. So what will come? 4 lakh 50 into 110%. So what will come? 4,95,000. Now I am telling you shortcut method. No struggle at all. Shortcut method. You can do lot of method. I am telling you shortcut method. 4,95,000 is for 15,000. What is for 25,000? How you go 25,000? 15 plus 10. We are selling what? 25,000. Same way. 4,95,000 is for 15,000. What is for 20,000? This is one shortcut. I will tell you another one method. What is another method? 4 lakh 50. This is for 15,000. So what you get 30 rupee. They said 10% increase. So 1 unit will become 33. 1 unit will become 33. So another one method. 15,000 into 33. 25,000 into 33. 20,000 into. This is also easy method. So that is the speciality of marginal costing. You can do different method. Okay, friends. Now, what about labor? 25% increase in labor. So, what will be the labor? So, labor 3 lakh into 25%. 3 lakh 75. So, 3 lakh 75 is for 15,000. What is for 25,000? This is for 25,000. What is for 20? Next, variable overhead. They are silent on variable overhead. That means variable overhead is not changing. So variable overhead per unit will be 10,000. So this will become what? We have done one small correction. See, we are selling right now 15,000 unit. So we have taken here wrongly 10,000. So we have to change into 15,000. So you will get 1,50,000. So variable overhead 1,50,000. Here will come 2,50,000. Here will come 2 lakh. Hope all of you are clear. Directly 10 rupee, 10 rupee. Next, fixed cost. The fixed cost 5,75,000. Immediately there is going to increase by what? 50,000. So whether you get the accept or not, you are going to increase immediately by what? This amount. And one more smart correction. This is also no one helped me. This 15,000 into 16.67, you get 2,50,000. So your fixed cost will be 3,50,000 only. So 3,50,000 into 50,000. You will get what? 4 lakh. You will get what? 4 lakh. Everywhere. Fixed cost will not change. 4 lakh. Now we will go for the question perspective. These are all the data we considered. See, if you want to increase the capacity, they said that they have to bring a new machine, another 50,000 by of administration expenses. So admin overhead only for this option. If you want to increase 10,000 unit, so 50,000. Then you are required to recommend sales drive will incur a cost of what? 60,000. Then apart from that, there is a machinery increase. Where will be that? Yes. See, if you want to exceed the demand, equipment has to be cost of 10 lakh with a span of what? 10 years. So you will have a additional depreciation. So 10 lakh by 10 years. So 1 year it will be what? 1 lakh. So these are all the costs you have taken. We have taken all the data, my dear friends. Now we can take the total. For me, since I am using Excel, the answer is over. You have your sales, you have your profit. You have your sales, here you have profit. Here you have sales, here you have profit. Now you can go for ranking. What is the ranking? Higher the profit, better the option. Higher the profit, better the option. So this is rank 1, this is rank 2, this is rank 3. So what will be the comment? Go with, comment is very important in marginal costing question. Go with sales drive. Go with, so hope all of you are clear. So this is the comment you have to make it. So please take your own time and complete, friends. So, my dear friends, we'll proceed with the next question in our previous year question, which came for December 2013. It's a key factor question. So, this key factor base is there, but we have done in our regular class different cases of key factor. Generally, a key factor question will come statement of ranking, statement of allocation, statement of profitability. Statement of ranking, what you do, sales less variable cost, you will get contribution, you have to take key factor. In the regulation, we did key factor on what? Labor hour, machine hour, land, raw material, different cases. So then you can go for allocation. Who is rank 1, you will allocate, then rank 2, rank 3, then you can go for profitability. So that is a very good question. Please revise those type of questions also. So in that concept, little advanced level point, but very small, short question only. Question number 30. It is not a purely key factor question. Key factor concept we are testing for make or buy decision. Key factor concept we are testing for make or buy decision. We'll read it. XY Limited has two products, M and N, planning to allocate resources for the next period. 750 units of M and 600 units of N are required to be produced, but machine hour capacity is limited toward 3000 hours. So your machine hour is limited. Key factor. Any deficiency in component produced in-house can be made by purchase quantity from the outside suppliers. You have to buy from outside. The data is given below. That is your material, labor, variable overhead, everything. And what is the price from outside supplier also given. They are asking calculate the variable variable cost of each in-house. So first they are asking variable cost of, so question number 13. Variable cost of in-house. We have two products, M and N. Correct? So what you will take variable cost each item, material 62. We will complete in 1 minute. 87. What is the direct labor? 51. 75. All the variable overhead. Variable production overhead 12. 30. Fixed we don't want to take. So you will get the total variable cost. This is your variable in-house cost. Variable in-house cost. Now, what is the purchase cost from outside? What is the purchase cost from outside? 185, 259. Correct? That is our second point. Extra cost of buying each common. So what is extra cost? See, if you buy from outside, you have to pay 185 rupees. If you make in-house, you will incur variable cost only what? 125. Fixed cost we won't consider because whether you produce or do not produce, anyway you have to incur the fixed cost. So what is extra cost you have to incur? Here 60 rupees, here 75. So tell my dear friends, which product you are getting more extra cost? Here. So they are asking which one you will buy, priority. Here come the point. Key factor, we won't take by contribution, we'll take by contribution per hour. Same way, here extra cost, we won't take it. We'll find out extra cost per key factor. So your key factor is what? Machine hour, which is limited. So your key factor is machine hour, which is limited. How you know it is limited? You can just check it. You have 750 units of A. So 750 into each unit 2. What is your required? 1500. Here you have 600. Each unit you require 3. So total you require what? 3300. But you have only what? 3000. This is the reason we say we have key factor. So it is a key factor is there. So what you will do? If this is not there, if you are getting here 2800, then no question, you will buy N only. But here you have this key factor is there. So what you will do? You will take what is the machine hour. Here you take 2 machine hour. So you will go for extra cost per key factor. So they are not contributing extra cost. So contribution higher is best, cost lower is best. So if you go outside, see, if you buy, you can go for ranking. See, if you go with this extra cost per hour, you will incur only what? 20. This will incur what? 30. So you will go for which one? Yeah. So your decision will be what? You will go with N. Hope you are clear. So please take your own time and copy, friends. Yes, my dear friends, now we will proceed further. See, for your exam purpose, sometime in marginal costing, They will ask you transfer pricing question because it is come as a marginal costing and decision making area. So transfer pricing not a compulsory question always, but in MQP there is a transfer pricing question. So in this limited revision series, we are not going to in-depth transfer pricing because it is not a compulsory question always, but we are going to do MQP question plus one previous year question only came for 22 syllabus. That is only we are going to solve today. So in regular class we did around 20 plus sums. You can also revise the same also, but I request you that you can able to work out main transfer pricing area with the concept so that any question you can solve. But however it is not a compulsory question always. So let's start. So you can able to revise the key factor also. This is key factor related question came for MQP June 2025. So we are proceeding with the transfer pricing. So let's start the question. Division A is a profit center which produces four products P, Q, R, and S. Each product is sold in the external market. Data for the period is given below. Market price, variable cost, labor hours per unit. Product X can be transferred to division B, but the maximum quantity that might be required to for transfer is what? 2000 units of yes. The maximum sales is given below PQRS. Division B can purchase the same at a slightly price of 225. Suggest a transfer price for each unit if total labor hour is what? 24,000 and 32,000. This is a transfer pricing question of key factor. It is related to our key factor concept, limiting factor or opportunity cost. So we can able to revise a key factor knowledge also. So what is the first step here? First step, we have two division, division A and division B. First, we have to think division A perspective. What is the current capacity? You have a sufficient capacity? Do you have a deficit or you have a excess capacity? Based on that only opportunity cost is there or not. If it is, how many hours we will understand. So step one, statement of ranking. This we have already learned in our marginal costing area also. So first we will go for statement of ranking. So statement of ranking, we have PQRS. What is the selling price, friends? 350, 345, 280, 230. Less variable cost. 330, 310, 180, 185. So contribution. Labor hours is the key factor. So this is a very good question. Already one time also came. So this is a very good question. You can even expect for your exam also. Contribution. This is also key factor. Also same third only. You can go for ranking. Highest contribution is rank 1. Before that, let me tell you here one point. See here, rank 1 it is, this is buying from outside. So one small correction, let me tell you. In that question, they are asking you one point called, one second. They are asking the point called, which will have production. So this is decision N to buy from outside. That is already I have told. But question is asking in-house which is best. In-house best is M. So question is if it is outside then answer is N. But question is asking in-house. So in-house best is what? M. So please understand that point. So coming to back ranking. So we can go for highest contribution is rank 1. So when we discussing this ranking, I recall that point also. So we got rank 2, rank 3, rank 4. We got all the ranking 1, 2, 3, 4. So higher contribution, better the ranking. So this is common for both the case. Now you can go for statement of allocation. Here comes case 1. What is the case 1? See, case 1, you have 24,000 hours. Your opportunity cost or transfer price is based on the hour or capacity only. So case 1, 24,000 hours. So you have to go for now statement of allocation. So what is the total available hours? We have total available is 24. Now you have to allocate. Allocate to rank 1. Who is rank 1, friends? R. R, what is the demand? R 2000. So you all know what is the ranking criteria. Who is the rank 1? Whatever may be the demand, fully will be allocated. Whatever may be the demand, fully will be allocated. So you will then 2800 into what is the hour required for each unit? 2. Next you will go for rank 2. Who is rank 2? Yes. Yes, what is the demand? 1800. For each unit you require 3. Next who is that? Rank 3. Like that keep on going. Q. Q, what is the demand? 3500. For each unit what is required? For like that. You have to check is there it is still balance. 1800 into T. For time saving purpose, we are doing everything in one stretch. This total is coming 25. No, you have to stop with from here itself. So I will tell why, because you have not that much. This is the balance. Now for Q, for rank 3, see you have rank 3, you have Q. Q, if you go 2800 into for every unit 4, see how much you require. No, sorry. Yes, it will work out. No, no. See Q, the unit is 3,500. Q 3,500. See here, Q 3,500 into 4. You require 14,000. But your sufficient is only what? 30. See, we have rank 4 also, but no availability. What to do? Not to do. So this 13,000 balance, we have though Q and P is there. Q itself not sufficient. So this is not a key factor question. Key factor question, I will find out number of units. How you will find out? 13,000 divided by 4, like that. Here in transfer pricing, not want to do. This balance will go to rank 3. So balance 13,000 hours for Q, because Q you require 14, 15 is sufficient. Here number of unit don't want to compute. Generally in key factor question you will do number of units, but here this hour allocation only. Now what is the challenge for division A, my dear friends? Division A right now is having only 24,000 hours. That is just enough only for 3 products. That means they don't have enough labor hour to meet their own demand. At this moment, their sister concern is coming. Sister concern division B is coming. Can you give me 2,000 unit of yes for us? So what happened? We know in transfer pricing, minimum transfer price is variable cost only. But here there is an opportunity cost. What is the opportunity cost? If they want to produce 2,000 unit of yes, for every unit of yes you require 3 hours. They require 6,000 hours to produce, but they don't have no hours. See, already they have only 24,000 hours. That is not enough for to, because this is all they're selling outside is. Yes, they are doing 1,000 outside is only. Now in-house is coming another 2,000. So 6,000 hours is required. Where they will bring all these hours? They have only how many hours? Only for 24,000 hours. So what they have to do? If they want to fulfill the division B requirement, they have to cancel some product. It can be yes or it can be R, any product. so that they can get the sufficient hours of 6,000 and fulfill the requirement. For that, there is a cost involved, which is called opportunity cost. That is, this hour can be used for external things. You could get some profit. Now, if you produce for in-house, you won't get it. So here the opportunity cost, when it comes, the formula is what? Variable cost plus opportunity cost. Variable cost plus opportunity cost. So we are going for statement of transfer pricing. Now we are going to compute the transfer pricing. So first one, it is variable cost. What product they are asking? They are asking the product called a 2000 unit of yes. So 2000 units of yes they are asking. So you have to take yes variable cost 2000 unit. Yes variable cost is what? 185. So 2000 into 185. Now you have to add your opportunity cost. How to find out opportunity cost? For that, first you should know what is the labor hours required. If for 2000 unit, every unit you require 6,000 hours is required. Do you have any surplus hours? If you have any surplus hours, no, we have no sufficient. If surplus hours, suppose if we have here 50,000 hours after fulfilling all the demand, still we have a labor hour, so we don't incur any opportunity cost. So no surplus hours. We have insufficient hours only. So no surplus hours. So what is the labor hours required? Labor hours required, we have 6,000 hours. So this you have to take from where? You have to take from this allocation. To whoever you have allocated, you have to allocate from this ranking basis. Who is the lowest ranking? That is the lowest contribution giving. From him you have to take. See, if you want to kill one person, to whom will you kill? Who is more harm to you? Same way, if you want to compromise some product, who is giving you lowest contribution, you have to make it. So lowest contribution is P, but you went to the allocation. We have not done any allocation at all. We require 6,000 hours to fulfill the demand. Now we can go for next ranking Q. Q, if you go for 13,000 hours, what is hours we required? 6,000. So it is there. So we will take from Q. Suppose if Q we have only 4,000 hours, what you will do? Q will take 4,000, balance 2,000 will take next best ranking, that is S we will take. Like that, this is how the key factor concept. So here you will take 6,000. So 6,000 you will take it for each unit of Q. What is the contribution you are going? For each hour it is 8.75. So you have to go with what? 8.75. You have to go with what? 8.75. So you are getting 6,000 into 8.75. So this is how total transfer price. You have to add both. Total transfer price. They are asking transfer price per unit. So what you have to do? 4,22,500 divided by how many units? We are selling 2,000 unit. So you can go for it. Now 200. What is the market available price? Market you are getting 225. So what you will do? You get transfer price, they will give only 211. Market is 225, which is best? 211 only. This is only lower. For you, division B want 2000. Division B, if they buy from market, they have to pay 225. If they buy from their sister concern, they will charge only 211. So the buyer perspective, market you have to pay 225, division A you have to pay 211.25. So for you the lower one is what? 211.25. So you'll buy at what? 211. So the transfer price will be what? 211. This is what case 1. Now what happened now? Case 2, they're telling 32,000. What will happen? Ranking don't want to do, but this area will change. What this area? The same thing, allocation and transfer pricing will change. So you have to check surplus is there or not. You can just copy this and try yourself. What will be the case 2? If it is coming, it's a very good question. You can score in your MQP also. You can find this question. So all the best, friends. Please try. Now, let's see how many of you got the correct answer. For me, since I am using Excel, just scroll down. So the case will come 32,000 units, 32,000 hours. So here will come 32,000. So we have balance. So we'll go for rank 3 Q. Q, how many units we have demand? 3,500, correct? So 3,500 into 4. Still you have balance of 7,000. So you go here, P, 3,000 into 3, we don't sufficient. So we can go for, sometimes we will get surplus. In the regular class, we did surplus also, but here we don't have no surplus. So this will go to rank for P. See, P actually, this entire 7,000 hours will go. P, their requirement is how many friends? P, they require 3,000 into 3, they require 9,000. But we don't have only 7,000, so that is enough. We can't give it. In exam purpose, what will happen now? Sometimes if you get here somewhere around 35,000. Now here come 10,000. So 9,000 if you give for P also, 1,000 there will be surplus, the 1,000 will come here. So your labor hours will be 5,000 only will come. Key factor, that is opportunity cost will come. That is also we did lot of question in your study material also there, but that case is not here. So here it is 7,000. So this perspective is correct. Everything is correct. The opportunity cost will now change. The reason is what you require 6,000 hours. Now the same strategy. You will see the rank. You will take from the lowest ranking. Lowest ranking is P. In the previous case, there is no allocation to P. That is why we take an Q. But here there is allocation to P. So we'll take from P. Here the opportunity cost is 6.67. P, how many units you have? Yes, P you have 7,000. You require only 6,000. No problem. Suppose if P you have only 4,000, 4,000 you will take it. Balance you will take from Q. So here you have already 6,000 from here. So 6.67. So 6,000 into 6.67 we'll take it as a round of number 40,000. So we'll get 205. So congrats for those who got the correct answer. You can take your own time and copy friends. So this is how we have to approach the transfer pricing questions. Now we'll go for next question in transfer pricing. My dear friends, transfer pricing, though there is no n number of questions for previous year, but MQP, both the set transfer price is there. So MQP, both the set transfer price is there. That means transfer pricing questions coming are more chances are there. So we are doing the next question of MQP. This is from set to one. This question is your study material question. We have discussed in our regular class also. Anyway, for the purpose of revision, we will discuss right now. So hope all of you are ready. I am also ready. Organo company is a multinational company and its managers have been delegated full profit of responsibility and autonomy to accept or reject from division. They want, they can accept. They want, they can reject. You have to be very clear about transfer pricing basics before watching this session. Otherwise, you won't be able to crack because our transfer pricing base concept application is there more here. Division X produce subassembly with a ready competitive market. This subassembly is currently used by Division Y, a final product that is sold outside. So Y is selling at 1,200. X charges Y market price of 700. Variable cost is 500 and 600 for X and Y. Wrongly they use the word called A and B, it is X and Y only. The manager of division Y feel that X should transfer subassembly at a lower price than in market because they are unable to make a profit. They are telling you are charging high price, you are charging at 700 rupees. Please don't do that. Please reduce the price. That is they are asking. Evaluate why profit contribution if transfer are made at market price and also total contribution for the company. Assume the division A can sell the product in the open market. Should X transfer the goods to Y? If so, what prices? This is fully based on autonomy and reject the offer they have. So we'll start first to two part, then we'll go for third part. So I know you're all ready. So we'll go for this question. Which question we are going, friends? We are going with question number 21. So I know you are ready. I am also ready, friends. So how we will proceed? First we will go for uh, profit statement for Y. What is the sales price? They are selling at what? 1200 less cost. Transfer price they paid. They have to pay transfer price. How much they are paying? They are paying 700. Additional variable cost. They have to incur additional variable cost. What is an additional variable cost? Which is 600. See, their point is correct. You are suffering a loss. They are suffering a loss. Correct only. So why? Now they are asking you profit statement for the company. See, for the company, we have discussed one shortcut method. So we are going with the shortcut method. The shortcut is very easy. Whenever company you can use the shortcut. If it is shortcut, what is the other method? That is also I will tell you. First, I will go for the shortcut. Shortcut, you have to go for what is the final sales price. What is the final sales price? That is, if you transfer, you will incur what? 1200 is the cost. Now, less variable cost. Cost, what you have to do? Variable cost at division X. Next, variable cost at division Y. If it is any fixed cost, that means you take only the cost. There is no fixed cost. If format wise, we have to take fixed cost also, there is no fixed cost that mentioned. So you can't call it as contribution negative. Fixed cost, we don't know, we call contribution negative. Here, variable cost as X. What is that? 520. Here it is 600. See, you will get a contribution of what? 80. See, you told another method. What is another method? Another method is what? You go Y. Prepare for X also. If it is X, how it will come? I will do in one lane. They are charging a price of 700. Their in-house cost is 600. So they will get a profit of what? 180. So 180 is the profit. 100 is the loss here. So net amount is what? 80. That means do for A, do for X, do for Y, and both you will get for the company as a whole. But that is not required. We have done this question also. So if you do MQP coming, you can easily able to score this. This is the first part answer. Now we can go for the second part. Assume division A can sell in the open market. The open market, they have opportunity cost. Outside, what is the price? You can't reduce it. Should they transfer the goods to Y? If so, yes, they can transfer. Yes, but at market price only. That is rupees 700. What is the reason, friends? What is the reason? Because outside there is a demand, they are ready to buy at 700. If they sell at a lower price to transfer, their profit will reduce. The beginning they said that managers have delegated full profit responsibility. So if you can buy, some person is ready for 700, if you sell at 600, 100 rupee revenue is reduced, 100 rupee revenue reduces, 100 is profit is reduced. So your profit will reduce. So no manager will take risk. The transfer pricing simple logic is that no manager will not go with any price which will reduce their ROI or which will reduce their RI or profit. We discussed good number of questions on ROI, RI. Please revise those type of question also in transfer price, because in MQP there is a two, both the MQP you have transfer pricing for this June 2025. It will be helpful for you. Now coming into the next perspective, we have third part of this question. So I proceed for third part. Hope all of you are clear. If anyone want to copy, you can just make it very fast. Then we can go for the third. Now, how to approach the next part, friends? Next part, we have a very good point. Assume X can sell in the open market only 500. That is, you can't sell all the 1000 at 700. Only 500 at 700 out of 1000 unit, and it can produce every month 20% reduction in price to sell full capacity. That means if you want to sell 1000 unit, you have to reduce your selling price. Can you take your calculator and tell me 700 minus 20% what you will get? You will get 560. That means you have to reduce your selling price to what? 560. You have to reduce your selling price to what? Then only you can sell 1000 unit. 500 times is okay. So, should the transfer is made? If so, what should be the transfer and what would be the how many transfer and what is the price? Schedule showing comparison of contribution under three different alternative to support given. So, in such a case, they are asking what will be the case you can make it. Correct, friends? So, we will have a three make it. Statement of profitability under each situation. Particulars. What is the first case? That is 500, that is 1000 unit we transfer 1000 unit, 500 units and 500 units. What is 500 unit, 500 units? That is 500 unit outside sale, 500 unit transfer. Why? Because such kind of adjustment, because we understood that if it is you want to sell 1000 unit outside, selling price will come down. So 500 is the optimal level. Now you can go for what? 500, 1000 unit outside. Come on, friends, please. So that's all. So my dear friends, let us complete. So this is statement of profitability. Company as a whole we are making. So this statement only will make. What is your final selling price? Variable cost of X, variable cost of Y. This is the statement, friends. You can just answer. This is the company as a whole we have to make. So hope all of you are ready. Very easy. So step one, 1000 unit we are transferring. That we are transferring. So what will be your sales price, sales value? Here the sales value will be 1000 unit you are transferring. So you're transferring now, it will be 1200. So 1000 into 1200. What will be the less cost? You will have both the cost. Variable cost at X, variable cost at Y. So what will come? 1000 into 520, 1000 into 600. Now coming to here, 500 unit you are transferring, 500 unit you are not transferring. So total 1000 unit you are producing. If 1000 unit you are producing, then what will happen? 1000 unit variable cost at X will come. But why you transfer only 500? Means why you transfer only 500? Variable cost will come 500 into 600 only. I'm not given working note, but you are clear. Coming here, sales what will come? 500 unit only you are transferring. So 500 it will come 1200. Balance 500 you are selling in the market. So for that 500 into you are selling at 700. This price will come. That is two sales price will be. That is 500 you transfer, so you will get 1200. For that, both the variable cost. This 500 only, so that cost. So 500 into 1200 plus 500 into 700. Now finally, everything is outside. Everything is outside now. As you already said, you can sell only at 560. How you got 560? 700 minus 20%, 560. So 1000 into 560. Variable cost you will get only here because you are not transferring. So this will not come. It's because you are not transferring. You are selling only to what? Outside is. You are selling only to what? Outside is. So what is the total cost, friends? We have done the total cost. So you can go for contribution because don't profit. So contribution, which is best, let's see. So the best one it is, we can go for ranking, which is best. Best one it is this one. So you will do what? 500 unit you transfer, 500 unit you will go for outside. So this is the answer. So hope you are clear. Similar type of good number of question we discussed in our revision class also. So please practice the same. Our intention to revise this MQP question we have did. Previous question of MQP also very good. It is opportunity cost. This is for the company as a whole. So we did in our regular class in your ICMA material also we have ROI RI model question. So residual income alpha beta one question we have that ROI question also there. So please revise those type of question also. You can crack that 7 mark easily. So this is how you have to approach the transfer pricing. Hope all of you are clear. So we will start with our first topic. So we are very clear with our time plan for the day. So we are going to start with our first topic called a standard costing. See, my dear friends, in your group 2, you have a minimum 20, close to 20 mark weightage in this chapter. That is every exam 14 mark minimum coming for your exam. Sometimes some extra 7 mark also coming. That means it may go up to 21 mark, but minimum 14 mark is there every exam. Apart from that, MCQ there will be 2 questions, so it will come close to 18 mark. So 1 to 2 question will come from MCQ. It means one of the very good weightage area. My dear friends, this rapid revision session will help you to score all the question of your standard costing because we are covering all the area. Important concept of material, important concept of labor, important concept of overhead, and also consolidate question including reconciliation. So this is a one-drop solution for you to revise your standard costing, and we are doing all the important questions. So before starting the session, hope all of you know the base of standard costing and how to compute standard costing in tabular method. We have discussed it in detail in our regular session. So we discussed around close to 45 to 60 questions in our regular session. So continuing to that, I do not want to repeat again what is SQ, what is SP. So we are right away going for the problem because you are ready with our base concept. Moreover, majority of you might have been done group 1 also. So you will have a base. So our strategy is what? Exam perspective, sure short, main question we are going to solve. Exam perspective, sure short, main question. For your main exam, number changing only they may be going to test on this standard costing. That is a selection of question we have taken in all the part. So how we are going to approach the question? We are going to start with our base, that is material, labor, overhead. So every area we are doing essay model standard question. That is, if it is a 7 mark question, if it is a material, with a normal loss. If it is a labor, we are going to do with the ideal take. Like that, we are going to do. So I know you are ready. I am also ready. So let's start. So we are going to start with the question. First, we will go with material. A material question is in our 7th question. So we can start. This is a previous year question for your exam. Came one time. So we are going to start the same. Z Limited manufacture a standard product. The standard mix is given below. X 60% at 15, Y 40% at 10. Normal loss. Yes, there is a normal loss of what? 20% of input due to shortage of material. Y. The actual result of May 2022 is where material X is 210 kg at 16 per, material Y 190 kg at 10.5 per kg. Actual output is what? 330. They are asking you to find out all the variances. So my dear friends, this is a revision session. So you can also parallelly start so that you can boost your confidence. Okay, you can also parallelly start so that you can boost your confidence. So I hope all of you remember the format which we generally follow: standard quantity into standard price. So we have discussed the logic behind this format in our regular class already. So in this revision session, I don't want to go to that point. So RAQ into SP. This RAQ in your study material is given as RSQ. So you can use either RSQ or RAQ. Both are same wording only. AQ into SP, AQ into AP. So let's start the game. I know you are ready. I am also ready. So 1, 2, 3, 4. This is the data. So we have to find out two products. So we have two products. So we have X and we have Y. So we have two product X and Y. My dear friends, majority of product this AQ and AP is given. So you can start from your right to left so that you can get confident booster for that. So AQ and AP they given 210 at 16. So I'm just doing directly. I don't want to give the much timing on that. So 210 into 16. Hope all of you are clear. Next product A 190 into 10.5. So you can go for the same 190 into 10.5. Clear? So we got the number. Next coming here, AQ into SP. What is your AQ? Your AQ is what? Again 210 or else SP. What is the SP? Which is 50. If anyone want, since it is the first question, if you want, I can give that numbers also. 210 into 16. Here 190 into 10.5. Here 210 into 15. And here 190 into 10. Correct, friends? Now RAQ or RSQ. Some material will be RSQ, some material will be RAQ. Whatever it is, the meaning is what? Total actual quantity in standard proportion. Total actual quantity in standard proportion. What is the total actual quantity? Total actual quantity, they are given in the question 210 plus 190, which is 400. What is a standard proportion, which is the proportion of your X and Y? 6 is to 4 or 60% or 40%. However, if you want, you can take. You can take 60%, 40% or 6 is to 4. So what will come for A X? X will be 400 into 6 by 10. Y will be 400 into 4 by 10. So 400 into 6 by 10, 400 into 4 by 10. So hope all of you are clear. So 240 into 15, 160. My dear friends, it's a previous year question came for 7 marks. So we are close to answer. Now finally SQ. SQ is very very important in all the question. SQ one line meaning standard quantity of input for or standard quantity for actual production. Standard quantity of input for standard quantity of input for actual production. What is your actual production or actual output? Production another term only output. Production another term only output. What is actual production? 330. But here this is an advanced question because you're doing old previous year advanced question. Generally, if it is 330, you can able to make a ratio. But here, the problem is what? There is a loss is there. Normal loss. What is the normal loss? 20%. That means the logic here of loss is what? See, 330 is the production. We know standard quantity of input for actual production. So the problem is what you have a loss of 20. That means you could have been given not for 330 input, more than that because 20 loss is there. So what is the input you are given? We generally call RAP. Any name you can call. Even if you don't want call a name, also you can make it. That is 330, 20% loss is there. That means your output is balance 80. If it is 10, 90, accordingly balance. So how you got 80 friends? 20% loss, 100 is the input, so 20 loss, 80 into 100. So this is the perspective. So what you will get 330 by 80 into 100. You will get a revised actual production of what 412.5. See, we have to take decimal itself because final only we will correct it because formula perspective we have to take it. So you will get this number. In this case, normal loss is 20. That is the reason we taken 80. If normal loss is 5, what you will take? 100 minus 5, 95 will be taken. So by 95 into 100. Hope you are clear. After this, our standard proportion, which you know already, 60%, 40% or 6 is to 4. So what will be the X? 412.5 into 6 by 10. Y 412.5 into 4 by 10. That's all. So you will get the answer called answer is ready. So you can apply. My dear friends, the 7 mark question is over, which is a previous year question. Now again we'll go for 165 into 10. So the answer is over. Now, exam purpose, how you can present it. The exam purpose, we can go total approach or individual approach. But always individual approach is best. Because if suggested answer they are not given total, then examiner may not give you the mark. So I suggest you to go for individual approach. I suggest you to go for individual approach. So we will go with answers. So material cost variance. Material cost variance. So 1 minus 4. You should know all the numbers. 1 minus 4. So what is for x? 1 is 247.5. 1 second. Into 50. So 3712.5 minus 3360. So what will come? You are getting positive. If positive, we call favorable. If it is negative, we won't put negative, we'll call it as adverse. Now we can go for 1650 minus 1995. 345 adverse. So total you can add both. That is minus and plus you can adjust. You will get 7.5 total. This is what total material cost. So this is for X, you have to show. This is for Y. This is what? Total material cost variance. This 7.5 you can get one shortcut also. What is the shortcut? The total we have here, total we have here, you will get this. Are you able to see both the total? Now what I am doing is, exam I told you have to prepare how better you can go for each product. But in this rapid revision session or marathon session, we are going to discuss total only. Now, all the answer we will do only total only. But exam perspective, you have to show how X what comes, Y what comes, like that you have to show. Because some examiner will not give mark if you don't show the product wise, because product wise data is given, we have to show product wise, but you know very well we can do it very fast. So now for presentation purpose I will do now total only. So material price variance, next one they are asking material price variance. So price variance is 3 minus 4. I hope all of you remember that point. 1 minus 2 is yield, 2 minus 3 is mix, then 1 minus 3 is material usage, 3 minus 4 is for price, 1 minus 4 is what? Cost. So we'll go for price variance. So I'm doing only for total. So what is the total answer? Total you will get 3 minus 4, 5050 minus 5355. So 5050 minus 5355, you will get 305 adverse. You will get what? 305 adverse. Now what is the next step? We are doing only total for the time being, but I told exam perspective, you have to do individually like our cost. Material usage variance. 1 minus 3. What is 1 minus 3? 5362.5 minus 5050. So what you will get? Adverse. See, my dear friends, for your information, I will tell you. Every one of you know, but this will helpful for 2 mark also. See, this price and usage total only cost will come. So this will helpful for reverse calculation also. See here, your 305. This is your favorable only. This is favorable. So look here, 302.5 favorable. This is adverse, we have to minus. You get what? 1.5. That's 7.5 only what? Material cost variance. So exam purpose, you can do another shortcut also. If you do price and usage, add both, you will get what? Cost. If time is not there, you have to complete very fast, you can do this kind of shortcut. Moreover, for doing 2 mark question also, this kind of reverse calculation will help. Same thing we go for mix and yield. Mix and yield total only called usage. Mix and yield total only called usage. You will get 302.5. You find out yield and mix it. Take the total, you will get the same answer only. Now we will go for the next item. Material mix variance. Mix variance is 2 minus 3. So we'll see how to find out. 5200 minus 5050. Favorable. Then material yield variance 1 minus 2. What is the answer? 5362.5 minus 5200. You can check it. The total will be the same. Favorable. See, if I take this total, I'm getting the same number. So, my dear friends, 7 mark question is over. So, this is how you have to approach. So, hope all of you are clear. So, you can take your own time and copy, friends. So, I request you to complete thoroughly so that we can able to save good amount of time. So material, one good question we did. Now we'll go for labor. In the regular class, we did lot of standard question. So I request you to revise all those questions. That is also relevant for you. The regular class, we did question on different perspective. So that all very good question only. You can practice those questions we discussed in the regular. But in the revision session, we are doing standard question in all the area, which will help you to grasp all the concept. Now we'll scroll down. We'll go for next question. Hope all of you are ready. Again, another previous year question on labor we are going to approach. You are ready, so I am also ready. See, if it is a labor, don't worry. This wherever come quantity, it will change with hour. Wherever come price, it will change with the rate. That is the only change for labor. Balance everything is easy. So we can go for labor question, which is also a previous year question. So which is the question number 4. See, I don't know. This is not a previous year question. This is MQP. Institute released the model question paper for your June attempt. So this is the MQP which is came for 14 marks. But I don't think so. This is a 14-mark question. This question we did in our regular class also. This you can complete within 7-mark timing also. So anyway, they made it as a 14-mark question. So let's start. We will try to solve this. Calculate the labor variances from the following data. Standard number of men. So standard is 80 men and 40 women. Wage rate standard 45 for men, 40 for women. Output per gang. Output per gang in hour. So one gang in a hour 50 units will produce. Gang hours in a 5-day week. So 5-day week hour is 40. Actual numbers 64 and 56. Actual wage rate 50 and 25. Actual, this is very, very important. My dear friends, labor, we are doing a standard question. That is, we are doing with ideal time. Generally, if ideal time is not there, we can directly do it. That is, you know already. I will also revise it. Here, see the things paid and worked is different. See, they paid for 40 hours, but they worked only 39 hours. That means 1 hour is ideal. So this you can do directly formula. That is, you can go for ideal time into what is actual ideal time into actual number of employees into what is a standard rate. You will get it directly idle time always will be addressed. But generally, in our session, we have discussed we can bring this idle time in our chart also. So we have learned a revised format of labor for solving idle time. So this will save your time. This will save your lot of point. So they are asking you to find out the labor variances. So with your permission, we are going to start the same. We can go for point number 1, which is standard hour into standard rate. Then generally we go with 3, which is actual hour into standard rate. Then we have 4, actual hour into actual rate. Here we have ideal time is there. So generally ideal time. The AH here we made is what? For paid. Now we have NAH. We introduced a term called NAH. So those friends who are not learned in detail, NAH is nothing but you what is the time you work. It is the meaning called time work. So difference only called what? Ideal. So you can make 3 or 3B. I just call it as 3B. You can call 3A. Any number you can call 3A or 3B, whatever it is. So NAH into SR. I hope you understand what is the difference between NAH and AH. AH means total hours paid. So this paid only will taken for rate variance, but efficiency you will take actual hours worked only because paid is not different. What is the time worked? What is the output? That only you have to check for efficiency. That means, my dear friends, a very important in this question it is not relevant. Normal formula for material efficiency variance. All of you know 1 minus 3 only. Normal formula for material efficiency variance is 1 minus 3. But when there is a ideal time, the formula will be PB. We have discussed in our regular session also the reason. Now also I am revising. If you want to measure the efficiency of a worker, you have to compare what is the time he involved in the work and what is the output, not the time he paid. Maybe no electricity is not able to work. So how can you take those time for his efficiency? That is wrong. So my dear friends, when there is a material efficiency variance, you can compute two-way. Material efficiency variance you can compute two-way. If this is the method, if no ideal time. This is the method if ideal time. How interesting, friends. So this revision will give you clarity on ideal time variance. That is, normal formula is what? 1 minus 3. But when there is an ideal time, the formula will change. In this question, we have ideal time. In this question, we have ideal time. So it will be what? Not 1 minus 3. It is 1 minus 3b. It will be 1 minus 3b. Hope you are clear. Understand. You are able to learn both the concept on this area. That is very nice for you. So let's start. So we have our old data. So we'll start it. How many type? Men and women? Men, women. You can take all the data. 64 employees are there. So 64 into paid is 50 rupees for the men. Here 56 paid 25 only. They made a lot of discrimination. Now we have actual hour. See here one small point. This is number of employees. So you have to take hour, you have to multiply with 40 because weekly hours also you have to get now. So you have to multiply with the 40. So actual hours also same thing. 64 into 40. 64 is the employee. 64 is the employees. If you want to get the hour, you have to multiply the hours worked day. Hours worked day, they mentioned clear. The gang hour in a 5-day week is what? 40. So you get this 40 into standard rate. Standard rate for men is what? 45. And what about here? 56 into 40, the same point. Standard rate is 40. See, human standard rate they fixed to 40, but they paid 45 only. Here 45 they 50. Lot of discrimination, that is not fair. So we get the number here 64 into 40 into 50. 56 into 40 into 25. 56 into 40 into 40. 64 into 40 into 45. So hope all of you are clear. Now we have to find out a NAH. What is NAH? Net actual hours. So we have already discussed he paid for only what? 39 hours. So the same thing, 64 instead of 40, he worked is only what? 39. So that only will change. That the 40 they will make 39 into 40. That is why we have identified one shortcut formula. 64 into 1 into 45 itself, you will get the answer. But when you do this format, this kind of point will come. So 56 into 39 into 40. So you get this number 64 into 39 into 45. 56 into 39 into 40. Now the final main point, SH. Actual output is what? 2400. So, my dear friends, what is the standard output? Standard output is, see, they tell 50 units per hour. So, 50 units per hour into 40 hour is the total work, 2000 units. What is the actual output? Actual output they mention is what? 2000. So, what is the SH? Standard hours for actual production. Standard hours for what? Actual production. So men what will come? Very listen. See, we have 80 men. So 80 men for 2000 unit now. See, this is the 80 men for 2000 men now. For 2000 unit now. What will be for 2400? Into normal hours, that is 40 hours. So 40 you can take later also. The 80 is the number of men. 80 is for 2000. What will be for 2400? Because standard for actual. So you have to change it. So 80 is for 2000. What will be for 2400? What about the women? 40 is for 2000. What will be for 2400 into 40? That is normal. 48. So you got the number. Or else let us make it into 40. So I'm making here into 40 here itself. Here also into 40 here itself. So already we multiplied there. So 3840 into 45. 1920 into 40. So I'm requesting all of you that see, you can just look into here. See here you can take either that number and multiply here, but we have done already here whole calculation. 3840 into 45, 1920 into 40. See, now you can take the total. Already we discussed in the previous question also. Exam perspective, whatever the variance you find out, do for men, do for women, take the total. Do for men, do for women, take the total. That is a better safer zone. But in the revision session, I have told you, we will do only total approach. We will do only total approach so that we can save a lot of time. Clear? So please complete, friends. And I request you to go with the totaling also. For me, it is very easy. So I want you all to try. Come on, friends. Let's see how many of you will complete. Please take your own time and complete. So hope all of you are clear. Now, one more point that I would like to add. Anyway, you are copying. This question came for 14 mark. So you may think that in labor we have yield and mix also. Can we do that? Yes. So we can do in this question yield and mix also. So what I'm telling, if it is coming for a 7 mark also, if you want, you can do for the next point. That is none other than we have an interesting area called a yield and mix. So I can help you for that also if required. So we will just make for that also. We can just go for point number 2. You are all very familiar with point number 2. In material also we have discussed that RAQ. So here instead of RAQ, it will come what? RAH into SR. Revised actual hour into standard rate. Revised actual hour into standard rate. So here one main point we have. Some point, let me tell you one main point. So hope all of you are ready. Shall I? Yes, here one main point what I have to tell you that while taking this RAH, we know total actual hour. So here comes worked in standard proportion. Total actual hours worked in standard proportion. So we don't want to take the total hours paid because efficiency purpose every time you have to take what worked. This area always you are taking 1 hour. That is we have already done 64 into 39. So what is the total actual hour? Total actual hour worked. That is 64 employees into 39 hours plus 56 employees into 39. So what you will get? So this we are doing additionally. If required, we can work on this. So what is the standard proportion? Same way how we did the same thing. Standard proportion 80 is to 40. Otherwise we can say 2 is to 1. Correct? 80 is to 40 or 8 is to 4, we can say 2 is to 1. Shall we? So what will come for men and women? Men will be 4680 into 2 by 3. Woman will be 4680 into 1 by 3. How interesting. 4680 into 2 by 3. 4680 into 1 by 3. Clear? Now you can just apply 3120. Here you can apply 3120 into 45. 1560 into 40. So we are done that also. That is idle time is coming. How yield and mix. I am telling very important point. If there is no idle time, you will take 2 minus 3 only. You will take what? 2 minus 3. Since there is an idle time, you will take 2 minus 3. So what will be the number? 3120 into 45. 1560 into 40. All are ready. Now, whatever the numbers you can find out, you can do it. Labor cost variance 1 minus 4. So I'm doing everything, final answer only, labor total only. For example purpose, this question total also fine because this question 14 mark question. So you can do individually also. So here I do only total because individually anyway we can save time. So 1 minus 4. So we get. So this is plus, so positive. Labor cost is over, so labor rate variance, which is 3 minus 4. So these are all will not formula not change. Individually also we have to apply the same formula. Now the formula little bit labor yield variance also formula will not change. 1 minus 2. Labor mix variance formula is changing 2 minus 3. Generally 2 minus 3 here that will be slight change. How interesting friends. So this is how we have to approach. labor efficiency variance 1 minus 3. Generally 1 minus 3, now it will come 1 minus 3. This both total only will come. Now we have did labor ideal variance. Labor ideal variance always will be negative. That is adverse. 3b minus 3. So this is the answer, friends. So this is how we have to approach. So hope all of you are clear. So we have done the total also for you. So you can take your own time and complete. A very good question. So we discussed for material, we discussed for labor also. One second. Yes, my dear friends, now we will go with a overhead. So overhead is one of the main important area for your group 2. Generally, material labor are covering for your group 1. So exam perspective, if you take the number of questions, out of the 3 of recent question paper, 2 time overhead is key. Moreover, I would like to say all the time because in consultant essay, anyway overhead will come. So overhead is one of the main important area. So we'll go with overhead now. We'll start with December 23 exam question. So MAS Gems Limited provide you the following data for the month of March. So they're given standard, actual, fixed. Standard service called budgeted, unit produced hours, number of days. You are going to do all the variance. They're also asking you to do the ideal time variance also. This ideal time is nothing but we have efficiency, capacity, calendar variance also. So that calendar only they are discussing on this ideal time. So shall we start, friends? So we'll go with the questions. So let's start. We will go with our point. So hope all of you know that we have discussed in our regular session also. We can do over a two way, either hourly based as a recovery rate or output as a recovery rate. Shall we go with hour in this case? So we'll go with hour in this case. If you're going with hour, it will start with SH into SR, then it will be AH into SR, then RBH into SR, then BH into SR, which is also called budgeted fixed overhead, then AH into AR, which is also called actual fixed overhead. So this is how we have to approach. See, my dear friends, I would like to tell you one thing. This AH into AR and BH into SR, majority question will be given. So overall, what happened now? Students have one tendency. Group 1, they learned material labor. They revise only that. That is not a good strategy because that takes more number of time. Overall, every time coming question for group 2 and you can solve very fast. So you can utilize that benefit. So what is this AH into AR? Actual fixed overhead. Actual fixed overhead is given in the question itself. This will be given in all the question. You have to just paste it. Budgeted also given in the question. So this is how the easy point, my dear. Now you can go for RBH. What is RBH? You have to find out your budgeted hours. RBH is nothing but budgeted hours by budgeted days into actual days. Correct? So what you have to do now? You have to start with your budgeted hours. Budgeted hours, how can you do? Hours per unit is what? 20. So you have how many unit produced? How many unit produced? 1000. So if 1000 unit is produced, see the question is silent on unit produced per day or unit produced for the month. So what we will take it? We discussed this question in our regular class also. So can you tell me, shall we take for unit produced per day or for the month? What we will take? 1000 is a very small number because hours will be a little bit more. So we'll take unit produced per day. The question is silent on that. So unit produced because you have to get the hours. One unit, one hour na 1000 unit, 1000 hours. But we want for the entire period. So entire period we take 1000 unit is per day. So we'll go for 1000 into 1 hour into how many days? 20 days. So you will get what? What you will get? 1000 into 1 into 20, you will get 20,000 hours. This is your budgeted hours. So what will be your RBH? 20,000 by 20 days. Your actual days is what? 23. So accordingly it will change. How fast we can do. So you go to your RBH. Now you want to get your most proper area SR. What is SR? We want to do standard recovery rate or a budgeted recovery rate. We are doing for fixed overhead. So fixed overhead recovery rate, you have to take budgeted fixed overhead. What is the recovery rate you have taken? We are going with hour. If you are going with hour, your denominator will be what? Budgeted hour. If it is an output, it will be budgeted production. So hope you are able to recall both. So budgeted fixed hour we know 30,000. Budgeted hour is what? 20,000. So already hour we know. If you want, I can give the working note also. 30,000 by 20,000, you will get 1.5. So this data also over 23,000 into 1.5. So 22,000 into 1.5. How easy, friends? Correct? Moving further, now you can go for what? Next question, actual hour. Actual hour generally will be given in the question. So what is the actual hour? See, you have 23 days, 1200, 1 point. So what will come? 1200 unit. For every unit, 1.1 hour. How many days you work today? 23 days. So you can get the answer very easily. So it is 30,360 into 1.5. So hope all of you are clear. So you will get 30,360 into 1.5. Finally, SH. SH is the one and only area you have to make it. Standard hours for actual production. So in this question, it is very easy. Actual production is 1,200 per day only into 23 days. So we'll go for actual production 1,200 into 23 days. This is your actual production 27. So what is the SH? The actual production is less than 600 for every one unit 1 hour. So your standard hour will be what? 27,600. So the answer is over. See, my dear friends, take the timing we take for material labor. Over it, it is always will be time saving for you. So 27,600 into 1.5. So that's all. Oh, the answer is over. So you can able to go with what? All the variants. Fixed overhead, efficiency variance, which is 1 minus 2. Fixed overhead efficiency is 1 minus 2. 4140 minus, so it is adverse. Then fixed overhead capacity variance 2 minus 3. Favorable. Fixed overhead calendar. This is only the more ideal variance 3 minus 4. See how interesting. See, you all know one thing. See, efficiency, capacity, calendar. All the three subtotal we call a name called fixed overhead volume variance. All the three total we call fixed overhead volume variance. So fixed overhead volume variance, you can do two way. What is the two method? Either you can do 1 minus 4 or you can add all the favorable and less all the adverse. So either of the method you can do it. So it is adverse. It is 1 second. This is favorable only. So this is also favorable. So this is how the numbers will be. Next time, fixed overhead expenditure variance 4 minus 5. 4 minus 5. So this is negative, the 5,000 adverse. See, now finally, total fixed overhead variance. Total fixed overhead variance My dear friends, you know already is 1 minus 5. We have a shortcut method. What is a shortcut method, friends? You have expenditure, you have volume. So if you add these two, one is favorable, then minus. So that is the reason. So you have to check the sign. You get 6,400 favorable. You can also counter check. You are doing total same answer only we get it. So this is how you can complete. So hope you are clear. So overhead variance and all, one of the easy question you can able to complete. So you can take your own time and complete it. So this is all you have to present, you will get easily 7 marks. So overhead is a generally sure short question, and what question we discussed now is a previous year question answer. Now, my dear friends, in the beginning, we were discussed the point called a unit produced 1,000 per day or month. We discussed per day. See, this can be done for a month also. Your suggested answer they done for month. So, my dear friends, if you want to solve as it is December 23 suggested answer, we can do for per month because question is not clear. This is for month, but heading is there for the month of March that we missed. So if you go with for the month of March, so you can go for this unit produced also month only. So no need to take for a day. So this is you can able to understand if it is per day how to solve it. Now here heading itself they said very clearly what for the March. That means unit produced for the March only. In such a case, what will happen? This budgeted hour you will not have no 20 days. So see the things answer will able to you will get 1,000 hours. So here will come 1,120. You will get everything very easy. This is another one method. SR and all it is a one line point. So you will get 1,000. You will get 1,000. You divide with 1,000. So for me it is just a 1 minute calculation so that I can able to complete it. So actual hour we don't have no 23 directly we have to multiply. See how interesting, friends. So this is how you can able to get the numbers very clearly. So this will have impact. What will happen? This will have the impact, your RBH is now changed 1,150. So that will have an impact. So you will get 1,150 into 30. You will get 30 for 500. And here actual hour, what is the actual hour you have? 1,320. So 1,320 into 30. How interesting. Yes, such we have to go for. Actual production is 1,200. 1,200. So standard hours will be 1,200 into for every unit. What is hour? 1 hour. So you'll get 1,200 hours. See how easy. So 1,200 into 30. So my dear friends, this will be the revised answer. We did in 1 minute. Clear? If you take for the month, this is the answer. So my dear friends, with this one example, you are able to get both the answers. If it is for a day, what is the answer? If it is for a month, what is the answer? So that is the benefit you are getting from this perspective. So please take your own time. So here, no need of confusion because we just confused on the base of produce, but here heading is for the month of March. So don't worry, unit produce they won't make it. So it is for the month only. But generally, over a month, 1,000 unit is very less. That is the point. We had a small confusion. If it is a 20, 30,000 unit, it won't be there. So no need to make any confusion in your exams. You can able to read the question very well so that you can able to understand it very clearly. So if anyone want to rewrite this perspective also, you can able to write it. In the regular class, we did this question already where we discussed in this format only. So I want to tell you in this revision per day also. So we did both the methods. I want to show you per day also. So we did both the methods. So that will be helpful for you to understand. So this is how the specialty, friends. So you will be able to get all these points. Friends, okay? Shall we proceed now? Okay? Good. Now, another very interesting. We told this overhead is always a good question. So June 24 also a very good question came. Here we have both fixed overhead, variable overhead, both are there. Here we have fixed overhead, variable overhead, both are there. So with your permission, we will start. I know all of you are ready. I am also ready. So JK Limited furnished with the following information. Standard overhead absorption rate 20 per unit. Standard rate per hour 4 rupees. Budgeted production 12,000 units. Actual production 15,660. Actual already is 2 lakh 95 out of which 62,500 is fixed. Actual hour is what? 74,000. Overhead they given different slab. You are required to find out standard variable overhead and fixed variable overhead. That is overhead recovery rate. You know what is the formula for overhead recovery rate? What is the fixed overhead divided by total hours? So here per hour they are asking. So first you should know what is the hours we have. What is the hours we have? So how can you get the hours? So hour per unit we can get very easily. I know all of you are ready. Here efficiency expenditure also asking. Here also efficiency capacity we are asking. So with your permission, we are starting this question. So we see you can able to understand, will be able to complete this question within less than 5 minutes. That is a speciality of these type of overhead question. So please believe. What is the hours per unit? Hours per unit is you have 20 is the standard absorption rate. Standard rate is 4. So hours per unit is what? 5 hours. What is the budgeted production? Budgeted production you have 12,000 unit. So what is the budgeted hours? 12,000 into 5, you will get what? 60,000. Correct? 12,000 into 5, you will get what? 60,000. Now you have to find out recovery rate. They are asking recovery rate for overhead and fixed. For that, you have to use the high-low method. That is you have to split because they given flexible budget. This is for overhead. Overhead include both variable and fixed. So from here you want to split variable and fixed funds. So you can use anything, anyone. Generally we follow high-low method, that is 8,000, 14,000. Or you can take anything. I'll go for high-low method. So what is the variable overhead per unit? Variable overhead change in cost. What is the change in cost? 1 lakh 80, 2 lakh 70. So what is the change in cost? 2 lakh 70 minus 1 lakh 80 divided by change in unit. What is the change in unit? 14,000 minus 8,000. So if you apply this, what you will get, friends? 15. Variable overhead per unit is what? 15. Now you can get what is the total overhead, any one level. Total overhead at 8,000 units. We did lot of such question in our management accounting classes and OPM also. So what is the total overhead 8,000 unit? It is 1 lakh 80. So you can less variable overhead. How? 8,000 for every unit it is 15. Are you clear? So 8,000 into 15, you reduce it, you get fixed overhead. Otherwise, budgeted fixed overhead is what? 60,000. Now answer is our standard recovery rate for fixed overhead. We are doing fixed overhead first. Standard recovery for fixed overhead. Budgeted fixed overhead by budgeted hours. 60,000 by 60,000, which you will get what? 1 rupee per hour. Which you will get what? 1 rupee per hour. Are you clear? Now, here, over a total is given. Standard rate for overhead is given as rupees 4 per hour. So standard rate for variable overhead. Don't want to do reverse calculation. What is mean by reverse calculation, friends? What is mean by 4 is the total, 1 is for fixed. So balance 3 per hour will be the variable overhead. Balance 3 per hour will be the variable overhead. Are you clear, friends? So this is the one method. Another one method also we can do. Per unit is 15. Per unit is what? 15. We use 5 hours. So 15 by 3. This also you can do. So 15 by 5 you will get 3, or this is a shortcut method. First part is over, friends. My dear friends, first part is over. Now you can go for the second part. What is second part of the question? They're asking variable or efficiency and expenditure. Already hour is there, so we'll go for hour. So you are getting another point of variable overhead also. So SH into SR, then we have 2, AH into SR, then we have 3, AH into AR. You know, AH into AR is called a actual variable overhead, which given in the question we can find out what is the actual variable overhead. Listen very well. Your total overhead is 2,95,000. In that fixed is what? 62,500. So balance is variable overhead. Are you clear? Total is what? 2,95,000. Fixed is what? 62,500. So balance is what? Actual variable overhead. 2,32,500. Now actual hours worked. Actual hours worked is what they given in the question. Yes, they given. So don't need to make any effort. 74,000. Standard recovery rate. We are doing variable overhead. Variable overhead recovery rate is what? 3 rupees. See, variable overhead recovery rate is what? 3 rupees. So 74,000 into 3. This is 2-3 time question for CA in there also. Here standard hours. So standard hours is nothing but standard hours for actual production. So actual production is what? 15,560. Every unit is what? 5 hours. We have already found. Hours per unit is what? 5 hours. So what you will get? 15,560 into 5, 77,800. So 77,800 into 3. Now you can find out each data. Variable overhead, efficiency variance 1 minus 2. You can do working note with answer. So you are getting favor. Variable overhead, expenditure variance 2 minus 3. See, you can do total also, but total is not asking in the question. Actually, total means what? 1 minus 3, or you can take the difference also. Hope you are clear. So please complete. Once you did, we'll go for fixed hour. I request you, you can pause the video and try yourself for fixed hour. Because already we discussed the fixed hour. You can try yourself also so that you can check it. Don't want to do everything. They're asking only efficiency and capacity. So now let's see how many of you are able to get for, how many of you are able to get for what? Fixed overhead. So fixed overhead, if you go through our previous question format, 1 minus 2 is efficiency. 2 minus 3 is the capacity. So 2 minus 3 you require RBH. RBH days details are given here, nothing is given. So my dear friends, the regular class also we discuss lot of questions. If RBH is not there, that means planned days and actual days are same. That means RBH and BH are same. So your capacity formula will be 2 minus 4. That is R is there only if the days are given. If days are not given, RBH and BH are same. RBH and BH are same. So because of the reason 1 minus 2 will be efficiency, 2 minus 4 will be capacity. The reason is what? Days are not given. If days is changing, only it will change. Otherwise, RBH and BH are same. Revise is not there. You planned for 20 days working. You worked the same 20 days. So no RBH is there. RBH is there, it is same 20 only. If you planned for 20, you worked for 22 days, then only it will change. So nothing mentioned, so it will be same. So in such a situation, you have to do one. If you go with our format, you can call it as 4, but I won't call it as 4. You can call it 3 also, RBH also. So SH into SR, AH into SR, BH into SR. This is also called budgeted fixed overhead. So budgeted fixed overhead is 60,000, correct? AH is already given 74,000. Recovery rate is 1 rupee. SH don't want to find out. Already you found out. See, here you found out the SH, same SH only. So whether it is variable or fixed or our is remain same. So don't want to find out again. So answer is over. You won't believe, my dear friends. Answer is over. Answer is over. So what is the answer? Fixed overhead efficiency variance 1 minus 2, 77,800 minus 74,000, 3,800 favorable. Fixed overhead capacity variance 2 minus 3 or 2 minus 4. See, what about calendar? They are not asking. Calendar is not there because days are different, then only the calendar variance will come. So both are favorable. So congrats, my dear friends. Please believe you have done a question in this 5 minutes time. So this is how you have to approach. Now we discussed the material, we discussed the labor, we discussed the variable overhead, we discussed fixed overhead. So I request you to go through revise the sales variance we discussed in the class. So sales variance also sometimes come for exam, but in this revision session, since there is no recent previous year question and NQP, it is not discussed. We are not discussing in this revision session sales variance. Now we are going the major area of the day. That is, we are going to do consolidate question. If you go through the recent previous year exam, December 24, they changed the pattern of exam. They come up with a consolidated question. One big data, they will ask you material, labor, overhead, everything. So that kind of essay question we are approaching. I know you are ready. I am also ready. So let's start. Are you ready, friends? So this is December 24 question, a very good question. See, whenever essay model question comes like this for your inter level, very rarely they will come with 2-3 material. If 2-3 material is there, then only yield and mix will come. 2-3 labor is there, then only yield and mix labor will come. So you can save lot of time. So here only one type of are there, so that can able to save lot of time for you. So we can read the question. Boston Limited use standard costing. It started 1st April 2023 and for one product. Standard data is given below. Standard price is 10 per kg. Every unit you require 20 kg per unit. Standard labor 5.5 per hour. Standard rate. For one unit you require 12 hours. Production hour all are fixed. So there is no variable. Budgeted is 9 lakh. Standard time for producing one unit is 12 machine hours and the normal capacity is what? 60,000 machine hours. Production already is absorbed on the basis of what? Machine hour only. On the basis of machine hour only. For the year ended 31st March, cost is given below: material, wage, production overhead, capacity, actual output. Assume no working progress or finished goods. They are asking calculate the standard product cost for one unit. They are asking standard product cost for one unit. That is standard cost. You have to add all the standard data. Analyze the variance: material, cost, price, usage, labor, rate, efficiency, cost, fixed overhead, expenditure, efficiency, capacity, and cost. Clear, friends? So, with your permission, we are starting. So, how we will proceed, friends? So, with your permission, we are starting today. So first they are asking standard product cost. Direct material. What is the direct material? See, 10 per kilogram, you need 20 kilogram. So it will be 10 into 20. Direct labor 5.5 into 12 hours. Production overhead. We have to find out. See, 9 lakh is the amount. Normal capacity 60,000 machine hours. 1 hour 12 unit. Standard time for one unit is 12 hours. So what you have to do? 9 lakh divided by 60,000, you will get recovery rate. For one unit, you require 12 hours. So what you will get? 9 lakh divided by 60,000, you will get recovery rate 15 into 12 hours you take. So 180. So we taken material, we taken labor, we taken overhead. All the answer we have taken. So we will get the answer called what? 446. This is the standard cost per unit. We have taken all the cost: material, labor, or. Are you clear how to find out the standard cost? Now we can go for what? Variances. You are expert on that. They are asking for first material variances. One, three, four. Standard quantity into standard price. Actual quantity into actual price. So we got the data. So this will be generally given in all the question, which is 10 lakh 50, the amount which is you paid. This AQ is also called actual cost of material. Actual cost of material. This will be always will be given the question. What is the actual quantity? Which is 1 lakh. What is the standard price? Which is 20 kilogram per unit, rupees 10. So 10. How easy? Standard quantity you have to do. Standard quantity for actual production. Your actual production is what? 4,800. Every unit you require 20 gram. So what will be the answer? 96,000. So answer is over. Please believe, friends. We are doing a 14 mark essay question. That too previous year recent question. So 96,000 into 10, 9 lakh 60. So you can get the data. What was the answer? Material cost variance 1 minus 4, material usage variance 1 minus 3, material price variance 3 minus 4. For me, just enter only. I will get the answer. 1 minus 3. All are adverse. All are adverse. Super. So hope all of you are clear. So this is how you have to approach. This is how you have to approach. So material is over. Now we can go for labor variances. Material is over. Now you can go for labor variance. What is the difference in labor? There is no ideal and all here. Wherever come quantity, it will change into hour. Wherever come price, it will change into rate. So now you can start. Hope all of you are ready. Shall we? Good. Actual hour into actual rate is called actual wage payday. Actual wage paid is 3 lakh 10,000. So you can take directly. Actual hours worked day, they mentioned 62,000 hours. For each hours, we paid how much? Hourly rate is 5.5. So you can take 5.5. See, only this much. It will take less than 1 minute only. Yes, such standard hours for actual production. So here, actual production is 4,800. For every unit, we take what? 12 hours. Every unit, we take what? 12 hours. So what you will get? 57,600. So 57,600 into 5.5. So my dear friends, please believe the answer is on. So you have to do labor cost variance 1 minus 4, labor rate variance 3 minus 4, labor efficiency variance which is 1 minus 3. Adverse only. Labor rate variance 3 minus 4. We have favorable. Labor cost variance we have favorable. My dear friends, believe answer is over. Now we have only one part, that is none other than overhead variance. Now we have one part, none other. Very important point. You can't take this SH. This SH is on the base of hour. Your overhead is charged on the base of machine hour. So same hour only, but here overhead is for machine hour. So SH will change. If it is labor hour, no need to find out, but here it will change. So we will go for fixed overhead variances. Fixed overhead variances. What all the data they are asking? They are asking everything. So we can go for all the data. We do now know RBH is there. So balance everything is there. So 1, 2, 4 and 5. 3 is not there because the days details are not given. So AH into AR. This is also called actual variable overhead. BH into SR, also called what? Budgeted fixed overhead. What is this? AH into SR. Here SH into SR. Correct? So AH into AR will be given directly in the question. Actual fixed overhead, which is 9,26,000. Coming into BH in this SR, budget fixed overhead, that is also given in the question 9 lakh. So now we discussed this is the third overhead question. So all these three questions you might have been identified that these two data majority will be given. So actual hours worked, actual hours of machine hour is machine hour only. So 60,000. So 60,000. So you have to find out the recovery rate. Recovery rate already we found earlier for the purpose of here, that is 9 lakh by 60,000. Anyway, if we want, we can do here also 9 lakh by 60,000. That means total overhead is 9 lakh and your total hours budgeted for machine hour is what? 60,000. So 50. So you can take. Already we found that But anyway, I have done that again. See? Now, SH you have to find out standard hours for actual production. What is the difference between this and this? This is labor hours. This is machine hour only. If it is labor hour, don't want to do again. Same thing you can take. But it is machine hour. Machine hour for 1 hour. Oh my god. Machine hour also 1 unit 12. Both are same. So in this case, you will get the same answer. But generally, the machine hour per unit may be different. So here, 1 unit producing 12 machine hour only. So it will not change. Otherwise, sometimes it will change. So what will come here? 57,600 into 15. That's all. Answer is over, friends. Fixed overhead efficiency variance 1 minus 2. I'm doing everything shortcut. You can make proper way. Fixed overhead capacity variance. It is 2 minus 3 only, but we don't have 3. So last question also we discussed. We can go for 2 minus 4. Fixed overhead volume variance 1 minus 4. Fixed overhead expenditure variance 4 minus 5. Then fixed overhead cost variance 1 minus 5. So this is adverse only. 62,000 adverse. This is expenditure. This is also adverse. Volume also adverse. When you get negative, you have to put adverse. Calendar, it is 0. Efficiency also adverse. All the best, friends. We have done a essay question, 14 marks. So this 14 mark also easily we can able to score. So please take your own time and copy. Now, my dear friends, we are going for another interesting area. We have already done a consolidated question. Now we are going to do MQP June 25, which is also similar to our class workbook question, which comes on advanced concept. This is little bit of final level concept, but still it is there in MQP. I don't want to miss this. So this MQP we are going to solve for you in this session. So my dear friends, what is this MQP is all about? This MQP is giving reconciliation concept, further concept also they are asking. So we are going to do the reconciliation concept also. How to do reconciliation in standard costing also you are going to learn. So let's start. ABC Limited adopt a standard costing system. Standard output for a period is 20,000. Standard data and profit is given. So this is the data for a standard. This is the data for a standard. The actual production and sale for a period is what? 14,400 unit. Actual production is what? 14,400. There has been no price revision by the government. So they are given the material. Price adverse is there. Usage favorable. What is mean by adverse? Adverse means price is increased. That is what you planned a standard, in that price is increased. What is in the favorable? It's good. Your cost is reduced. So adverse means cost is increased. Favorable means cost is reduced. That is the one point you have to do. Same way labor also, this is right and efficiency, cost increased, cost reduced. Fact overhead variable also we have fixed, admin also there. You are required to ascertain actual cost. What is the actual cost? They're given standard. So very easy. From the standard cost, add all the favorable, add all the adverse, less favorable, you will get the actual cost. And profit and loss statement also they are asking. So we'll do proper working. We'll do proper working. So show the working clearly. We can do shortcut method. What is shortcut method? Find out the total standard cost, add all the adverse less favorable, we can do shortcut, but they ask you to prepare properly. So we are going to do proper for you. Shall we start, friends? So we are going to do a small statement called a, very easily we can able to do. So statement showing computation of actual cost and profit and loss. So first we will start with material. See what is the standard material cost? Standard material, you have to take your actual, because we know SH standard is what? Standard quantity for actual production. So everything you have to take actual production. Don't take this 20,000, your actual only you have to do. So 14,400 into what is the material cost? For 1 unit, it is 4.5. 1 unit it is 4.5. Correct? 1 unit it is 4.5. So what will come? 14,400 into 4.5, 40,000. Now you have to go for all the material variants. The price is adverse. So add price variance, because why we have to add? Because cost is increased, actually is increased. So you have to add less usage because cost is less usage variance. So add 4250 less 1050. So what will happen? This is your actual 68,000. Next, we can go for your standard labor. What is your standard labor? Again, the same step. So you can able to go for it. 3 rupee. So 14,400 into 3. 14,400 into 3. What is the point? Add rate variance less efficiency variance. So what is the add rate? 4,000 less efficiency. Hope you understand the logic behind the add and less. You got 44,000. What is the next item? Next is some direct expenses. See, direct expenses, there is no variances. See, there is no variances. So you can take as it is the amount 14,400 into 0.5. If you want, you can take this also name called a prime cost, material plus labor plus overhead. You can take this as a prime cost. Now you can go for what? Add factory overhead. Factory overhead, we have variable also. So add, or we don't want to go that way. Standard variable overhead. Standard variable factory overhead. Standard variable factory overhead. What will come? 14,400 into, for each unit what will come? 0.25. Correct? 0.25. So what will come? 3,600. What is the adverse? It is favorable. So favorable, what you have to do, friends? Favorable, we have to add or less? Less. So you have to less. We have favorable 400. Only one item. Next, we have standard fixed factory overhead. What is that? 0.3. You get this. Now add unfavorable. What is unfavorable? Unfavorable, we have volume variance. Add volume variance less, we have expenditure variance. So what is the volume variance? Bigger amount, 1680. What is the expenditure variance? 400. How interesting, friends. Next we have picture also admin overhead. Standard admin overhead 14,400 into 0.3. 14,400 into 0.3. Again, you have to check the data. What is the data, friends? Only expenditure volume, both are unfavorable. So you have to add adverse. Both you have to add. So 400, I will do shortcut method this 1680. So this is what your total cost. This is your actual cost. So what is the sales amount? Sales amount they mentioned already in the question. 10 rupee. Sales is what? 10 rupee. So 14,400 into 10 rupee. One second. You can get your profit. So selling price is 10 rupee. Maybe printing mistake can also happen. So come on, friends. You can able to copy it very fast. Yes. So actually, that is not the selling price. We have taken the total double effect. We have to take from the prime cost. So you have to take your total cost. This is the data. We have taken double material labor again. We have so your actual cost will be this amount. So actual cost is a sum total of what? Prime cost total already we taken. So point number 4 plus all other total. You have to add from prime cost, then fixed overhead, admin overhead. So you got the profit. Hope all of you are clear. Now, my dear friends, we are going to do reconciliation. Generally, reconciliation will come for final level, but in intermediate, we are going to solve this for you, my dear friends, in this MQP also. So, how to do reconciliation? So, they are asking this question very clearly that reconcile actual profit with a standard profit. So, reconciliation of actual profit with standard profit. My dear friends, one of the easiest method only reconciliation statement under standard costing. So you can listen very well. One of the easiest method only reconciliation statement of actual profit with the standard profit. So you can start with it. Generally, we can start with standard profit. We can start with what? Standard profit. 14,400 unit we have. And what is the standard profit we have? Are they given profit? Yes, 1.15. 14,400 into 1.15. Your standard profit will be 15,500. Now you have to get. I am telling you, shortcut method, my dear friends, for getting this actual. This can be a very good point. SA model question. See what you have to do now. You have to get actual profit. Your actual profit will increase if it is favorable because your cost will reduce. So add all the favorable variances. You have to add all the favorable variance and you have to less all the unfavorable variance. That's it. You have to add all the favorable variance and you have to less all the unfavorable variance. That one line. So if you add all the favorable variance, if you add all the favorable variance. What are all the variance you can add in? See, favorable is this column. So material usage variance. Material usage variance. What is next? Labor efficiency variance. Labor efficiency variance. What is next? Variable expenditure variance. Next is what? Fixed expenditure variance. Anything else? No. So you have to enter all the amount. Material usage is 1050. What is the efficiency? 3200. Variable expenditure variance, both are 400. So you have to take all total. Now you have to reduce all the unfavorable variances. What are all the unfavorable variance? Price variance, material price variance, labor rate variance, then these are all favorable. Fixed volume variance, then we have admin variance. I am taking both together so we can save time. Admin variance. The reason is what? Both are adverse. So 400 plus 1660. Exam purpose you have to show separate. Fixed volume 168. Labor rate 4000. Material price 4250. My dear friends, if you done properly, it will be tallied. Just like your profit reconciliation statement of your group one or BRS of your foundation, it will be tallied. This will be the actual profit. Actual profit 1 plus 2 minus 3. See, we know what is actual profit. What is the actual profit? We have 9600. We should get that. We are checking, are we getting the same? We should get that. Then it is answer is correct. My dear friends, you are getting the correct answer. That means your working is correct. My dear friends, you are getting a correct answer. That means your working is correct. Hope all of you are clear. So a very good question, a superb area. This you can able to solve accordingly. Clear, friends? So please take your own time and complete, friends. So a superb area, you can able to crack this question very easily. Now, my dear friends, we will move to the next topic called budgeting. Now we will move to the next topic called budgeting. Budgeting is a very interesting area. Budgeting is a very interesting area. Then you can expect minimum 14 marks. 7 mark always coming. Sometime including MCQ up to 14 or 18 mark also coming. There are questions came for 14 mark also budgeting. Generally 7 mark, but 14 mark questions also coming because we have only limited topic. So budgeting is very important. See, highest priority there is for production and raw material budget. Then we have cash budget. If you are too lucky, we can get fixed and flexible budget also because fixed and flexible budget comparatively easy area. Variable will change according to the volume. Fixed will remain same. Any variable we have to identify what is the variable portion, fixed portion accordingly. So fixed and flexible budget we have did lot of question in our overall session. So since there is no recent previous year question on this area, we are not revising on that. But please revise those questions because maybe you are luck if that kind of questions may come. I have already told what is the strategy on this. Variable will change according to the volume. Fixed will remain same. Semi-variable you have to identify variable percent, fixed percent. Variable percent you have to change according to the volume. Fixed will be constant. So this is the area. Now we are going for production and raw material budget. See, in exam, they won't ask simply production. They will ask production raw material together. So how you have to do production budget? See, this is a format. Both production, raw material, cash budget, all are format. So I don't think even this revision may not be required because majority of you learned in your group one this topic plus this format based question you can easily able to solve. So how to make it production budget? Now the format is very simple. Estimated sales and a desired closing stock less opening stock. That is what production budget. So if it is a production budget, what is the step? Estimated sales and desired closing stock less opening stock. Sometimes a standard question, they may not give you closing stock directly. They will tell next month or next quarter 40%, 30% like that. Sometimes opening stock may not be given. What you do? Previous month closing only, this month opening. Previous quarter closing only, this month opening. Like that tricky also we have to work out. So this is how we have to understand. Clear friends? So this is how the production budget estimated sales add desired closing less opening stock. You will get production. Now on the base of production, you have to prepare raw material consumption and purchase budget. How to prepare raw material consumption budget? See, raw material consumption we have to prepare by analyzing the question input output ratio. You will tell that for a very finished goods you require 2 unit of A. So what you get? You get 10,000 unit now 10,000 into 20,000. Or they will tell for 10 unit you require 5. So what will happen? 10,000. For 10 unit you require 5. So there will be 5,000. Sometimes they will tell 30 percentage. So what you have to do? 10,000 into 30%. Sometimes they will do ratio 2 is to 3 is to 5 like that ratio also. So you have to approach raw material. So consumption they will give the pattern. After the consumption you have to add the same thing. Desired closing stock. So here also closing stock, here also closing stock. What is the difference? Here the closing stock of final product. Here the closing stock of what? Raw material. So add desired closing stock less opening stock. This is what called raw material purchase. Now from here, the question will be given cost per kg. That is what is called raw material purchase budget in rupees. So this is in what value? This is the most point. Sometimes they will give you some testing, some point. It's consumption different area I told. Stock also same point. They may not be given last closing only this month opening. Closing they will be given some ratios and all. Accordingly, we have to look it. So in your regular material or regular workbook, you will have all the format. So we'll go for practice first to production and raw material budget. Then we'll go for generally 2 3 times in previous year question cash budget. Yes, the question also will approach. With your permission, we'll start. Yes. So this is a December 2023 question, a very superb question. So we'll start. Excel Chemical manufacture two products. So final product is two, AB plus and CD plus by mixing raw material in the proportion. So here it is the ratio only 80 and 20. CD 50-50. The finished weights of AB and CD are equal to the weights of ingredient. There is no wastage. During the month, it is expected that 60 tons of AB and 200 tons of CD will be sold. They given the inventory. See, 1st June and 13th June is given. So we can understand 1st June is a opening stock, 13th June is a closing stock. So they are given for these are all for raw material. This is for final product. The cost also given. They're asking production budget, material budget, everything. Shall we start? It's a normal standard question. The regular question we have different testing question. Also, this is easily we can score, but we are focusing on previous year question. That is why we are doing the previous question. So you can revise those standard question we have highlighted in our regular session also. So we can go for first production budget. We have our format. So how many products we have? Two products. What all the products we have? AB plus, AB plus, and we have CD plus. So what is estimated sales? 60 tons of AB plus, 200 tons of CD plus. Desired closing. So closing is this. AB plus is 5. CD plus is what? 60. Opening. What is that? 10 and 50. So answer is over. See, 7 mark question and all. We can complete in 2 minutes. Now we can go for statement of raw material budget. We have A, B, C, D. We have 3 products. First, we have to go for raw material consumption. It is based on input-output ratio. We have discussed different combination in this session. So the last combination only, they said 80 percentage from. So 55 is the total, no wastage. Wastage they mentioned there is no wastage. This is equal. Suppose wastage is there, you have to take. So 55 into 80%. And here 20%. How interesting. Coming to next equal weightage. So 2 ton into 50%, 2 ton into 50%. Now you can go for same thing. Add desired closing less opening. So what is desired closing? 20, 40, 20, 40, 20, 40, 300, 200. Less opening. What is opening, friends? Opening we have 15, 10, 200, 250. So this is what your raw material purchase budget in units. How interesting, friends. So what is the cost per kg? They given what is the cost per ton. It is in 10. A, what is the cost? 500, 400, 100, 200. So my dear friends, 7 mark question is over. So raw material purchase budget in value or in rupees. So this is how you have to work. So once you are clarity in concept, any question you can solve very fast in the format. So please take your own time and complete, friends. Yes. Now we'll go for next question. Another one previous year question came for June exam also. This is another production budget which came also for your exam. So G Limited manufacture 2 product M and N. Both product use a common raw material called Z. So 2 finished product but 1 raw material. Raw material is purchased at 72. Company has a desired review of inventory management policy for the forthcoming year. The forecast has been given below. Sales unit is given below. Finished stock increase. What is the finished stock increase? That is add closing stock less opening stock difference. So we don't want to do add and less. Directly add number is given. Post production rejection. That means once your production is completed, you will get rejection of 4%. That means your good unit will be 96%. Your good unit will be what? 96%. 4% will be rejection. Material is it completed net of wastage. That is 5 kg and 6 kg. Material is it wastage is what? 10 and 50. Material also wastage. Additional information. Management has decided that there should not be more than 40 orders in a year for is it. Prepare a budget for the year ended 2025 production budget for M and N, purchase budget for Z. Shall we start, friends? So first we'll go for production budget for M and N. So what is the estimated sales? 28,000, 13,000. Now add, here add and less not there, finished goods increase. That is difference is given already. 320, 160. So if you add these together, this is what is called a units required. Now the main point. Generally, we call this as a production. But in this question, the problem is what? There is a rejection of what? 4%. There is a rejection of what? 4%. So what is the rejection? Here it is 4%. Here it is 6%. So if you want to get 28,320, you have to produce more than that. Like in standard costing, how you find RAP, same way you have to do. So what is the production in units? That is 28,320 is 96. What will be the 100? How you got 96? 4% is balance. So good news to 98. So this is how. This is 94. So what is the 100? Super. Congrats for those who got the correct answer. Now we can go for raw material budget for Z. So how the raw material budget for Z? What is the raw material consumption? See, raw material consumption is what? For every 5 kg. So 29,500 into 5 kg plus 14,000 into 6 kg. Second product it is 6 kg. That is, this is the consumption usage per unit. So you have to multiply both 29,500 into 5 plus 14,000 into 6. So this is the consumption. Now add stock. What they said about stock? They are not telling anything about the stock, correct? But there is a wastage. What is the wastage? Wastage is 10 percentage. Oh my god, so they are required for both. So M and N, you have to make column wise. Then only it will be done. 29,500 into 5, 14,000 into 6. Because the wastage is different. So what is the raw material purchase in quantity? Same way. 14,000 10% weightage, so 90. Here 95. So what is the cost per kg? 72, 72. Purchase cost in value. Both are same product only. The ratio is only different. So you have to take the grand total in out. Answer is on. This is how you have to approach. So how interesting, friends. So this is how we have to approach. So this is a very good production budget. A standard question they're telling how to compute production budget when there is a loss in production. How to compute production budget when there is a loss in production. This kind of question not in your ICMA material. So this kind of practice will help you to boost your confidence in the preparation. Boost your confidence in the preparation. So please take your own time and copy, friends. Now, my dear friends, we'll proceed with the next question. We have cash budget. Majority of the question we did cash budget. We'll go for December 23 previous year question. From the following data obtained from cost record of Pallapalli Oil Limited, prepare a cash budget for 3 months ending 13th June. I think some small data is missing. We'll just add. We'll see the question paper. So December 23, one small printing mistake is there. So we are just taking the same. Same thing only. Here the name. So same only, the same only 14 mark question. So same parameter only. So I thought of different alignment, different questions. So same question only. So they have given 3 month data for the ending. So they are asking 3 month budget from which all the period Jan to March. So they given October to March detail, material, labor, direct expenses, factory overhead, admin overhead. Cash in hand opening they given for January 1,35,000. Now for sales they given the data. I thought of different colors for different question. So the company produced two products, lubrication oil and grease oil. Operate three sales office, Kolkata, Delhi, Chennai for their sales of their product. Actual and budgeted sales unit from October to March is given below. So this is the sales unit, not sales value. So both the product, lubrication, grease oil, both Kolkata. Selling price for lubrication is 90 and grease is 73. There is an increase in price per unit by 3 and 2 rupee. Lubrication grease from Jan onwards. So selling price is changing. It's a very good question. 20% sale are on cash basis. Remaining 80% are on credit basis. So super percent. 50% credits are calculated in the month. Remaining 50% in the second month. Lag in payment of material 1 month. This is the level of the month due. Direct expense paid 1 month in lag. Factory overhead and admin overhead paid in 1.5 month lag. Mr. Rajan, principal director of the company, will get a superannuation from the company 31/3/2024 after selling the company for 24 years. The superannuation benefit comprising of gratuity 7 lakh, minimum fund 1 lakh. It is a general practice of the company to release gratuity among minimum fund on the releasing of additional. On April 1st, company purchased a vehicle, cost 40 lakh, 2 year loan, bank EMI auto debited by bank. Every month what 75,000. Shall we start this question? Though 14 mark question, very easily we can approach. The only twist is that the question we have to find out the cash collection. That is the main area. If you do that, balance everything is easy. So in this consolidate session, we are going to discuss cash collection. So you should be very clear on cash collection. So we are cash collecting how many months, friends? Remaining 80% are collected in the next month. So that means if you want January you will collect 2 months before. So November, December only we wait. November will collect on Jan. So we don't want October onwards. So we'll go for both the case. So I know you're all ready. See, for confusion purpose, they want Kolkata, Delhi, Chennai, and all. But all the price are same. Everywhere price are same. So no need of worrying about what making. We can take everything in a one stretch so that we can save a lot of time. If the price selling price is different in Kolkata, Delhi, Chennai, then we want a separate. So we can make a very easy point. So we can make month. What is a month, friends? So first we'll go for month. Lubricant oil. So we have to start from November, December, Jan, Feb, March. Lubricant oil 1200, 1100, 1000. Next, 1400, 1600. Now you can make lubricant oil in rupees. What is the lubricant oil in rupees? You have to multiply with the selling price. So what I will do now, this is only one location. So for time saving purpose, we'll add all the location in one because everywhere selling price is same. So 1200, 1440, 1080. So hope my total is correct. Next, 1100, 1320, 900. This is a shortcut method. We can save a lot of time because every location same selling price. So you need to go for confusion. Next day, 1000, 1200, 900. Next day, it is not 900, it is 990. Please check my total is correct or not. No, actually, it is 900 only. 1000, 1200, 900 only, correct. Next, 1400, 1300, 1300. What about the March? March 1600, 1500, 1400. Correct? Now we have to make the payment. The selling price of lubricant oil 90, so 90 rupees. So you have to multiply with 90. Now the main test is what? There is an increase of 3 and 2 for lubricant oil and grease from January onwards. So 3 rupee you have to add. Now it is 90. No problem. From January onwards, it will become what? 93. Here also 93. Here also 93. Now you can go for what? Grease oil. Grease oil. What is a grease oil? Same way. 750. So we have to start from November 900, 1080, 1200. Same way we have to go for December 825. Here friends, this is how we have to approach. Coming next, what is next? 750, 900, 1000. Next, 900, 1200, 1300. Next, hmm. Now you can get the grease oil in rupees. The selling price is what? 75. This is also getting increased to what? 2 rupee from January. So it will become what? 77. Now you can get the total sales. For getting this data only, we did all these calculations. Now you can get the data. You can get what is the credit sales. What is the cash sales? We can take directly credit sales. Credit sales. See, cash sales is 20%. So credit sales will become what? 80%. Now 50% of credit sales collected in the next month. So we'll start from our budget period only. Jan, Feb, and March. So here we will start. See, November month, 50% will collect in December. December not our budget period, so not required. Balance 50% in January. That's all over. Actually, one more 50% is there. That is in the month of December. But December not in our budget period. December there is a sale of 4 lakh 20, 50% in January, balance 50% in next. Now we have January. January sales you won't collect in January. You will collect in what? February. Sir, what about cash sales? That we will take separately. We are doing only now credit sales. Same way we have to go. February we have sales that you won't collect in February, that you will collect only in what? March. Sir, why you taken this March? This is for cash sale purpose we found out. Here not required because you will collect in the next month only. So cash sales purpose only we found out this. So if you take this, data is ready. Our main working note is ready. Our main working note is ready. Now you can go for cash budget, statement of cash budget. Okay, statement of cash budget for cash budget for 3 month ending 31st March 2020. You have to take Jan, Feb, March. Any question will start with what? We have a proper format. We start with what? Opening cash, which is given in the question itself. 1 lakh 35. Now you can take all the receipts. Anything. First receipts is what? Cash sales. So what is the cash sales, friends? Cash sales. What is the sales? January sales we have. So January sales, cash sales is what? 20%. Cash sales is what? 20%. So January sales value we have already found. In that 20%. February, what is the sales? In that 20%. March, what is the sales? In that 20%. Next will come cash collection. January we found out. March we found out. February also. So come on, friends. With this format, you can able to complete. So please take your own time and complete, my dear friends. In this revision, we are going to discuss 14-mark essay question in budgeting also to boost your confidence. So whatever may be the question, you can able to do. See, we have also learned the shortcut method. What is shortcut method? Confusion purpose, there is a lot of location. Whatever the location selling process is ready, so we can save a lot of time like this. So please take, my dear friends, and complete. So hope all of you completed. You can post the video and complete also. So receipts all are over. So we can take the total of receipts. This is your total of receipts. Now you can go for payments. We can take each payments. What all the information they given for payment, we'll read one by one by one. Lag in payment of creditors for material 1 month. So material 1 month. Wages paid between 1 to 5th of month due. Month due means 1 month wage. January wage you will pay next month 5th. That means anyway 1 month delay. It is 5th. Due, not same month. If they use same month, then we don't want to make it. It's 1 month delay. So wage also 1 month delay. Coming into next day, due. They use the word called due. Direct expense also 1 month delay. So we can take all these directly. That is specialty. So cash collection only difficult. I have told you, not difficult, lengthy. Coming into here, each item, direct material. What is the direct material, friends? 1 month delay. So December amount you will pay now 75,000. Here you will pay January amount. Here you will pay February amount. Same way, direct labor 35,000. Here you will pay 45,000. Here you will pay 50, not 45, 30,000, 30,000 here. January month. February month amount is what? 45,000. Hope all of you are clear. Direct expense also same way, 1 month delay. So what's the direct expense? December 17,000, February 14,000, March 25,000. So hope all of you are clear. Now we have to go for next item. We can go for factory and admin. We'll do together. Both are same. So factory and admin. It is not 1 month, it is 2 months, it is 1.5 months. Already in regular class we did lot of half month. This is 1.5 month. What is 1.5 month? That is January month half, February month. Both together will be paid in the March month. That is what is mean by half. So let us start the game. First, what we will do now, we'll make month. So we have to take from which month onwards? We have to take from 1.5 months. So we have to take from November onwards. So November, December, January, February. So what is the, we'll take both together. Admin and factory, I call it as overhead. Factory and admin, I call it as overhead. What is the November month amount? 35,000 plus 56,000. December month, what is the amount? 42,500 plus 68,000. January, what is the amount? 53,000. February, what is the amount? 50,000 plus. Now we are going to find out how the collection will come under each month. We want to get for January, February, and March. We'll do one thing. First is January. What is January? January, November 50% because half plus December fully. By this reason, friends, 1 month we take December only. 1 month we take December only. 2 months we take November and December. So 1.5 month what? December and November half. And concept clear? This is the logic. So for me, since I am so that meant so November half plus December. Okay. So what will be the point? November you have 91,000. You have to take half plus December full. Now what about February? No, no, it will be different ulta. Then it will be November we have to take full, December half. Reverse way we have to come. Generally, because 1.5 month before plus half. Did recently or not pending. So November full, December. Then only for February month what will happen? December balance half and November. Clear? So this is how you will able to make it. Correct, friends? 1 second, friends. One small correction. See, if we have half month, what we will do? I will start from that. Then it will be very interesting. If it is a half month, what we will take? December month half, again next month half. That means current month half, next month half. If it is a 1 month, we will take previous 1 month full. Same logic only will work. So if you want to get January month, you will pay December month. You have to pay December month full. You have to pay December month. Then you have to pay for December month full. Then you have to pay Jan month half. This will be the paid for what? January month. So December month you have to pay full. Then balance in the Jan month. 1.5 month delay. So what will be the situation now? December month full, Jan month half. Next, when it comes to February, Jan month half is pending. That half you have to pay. Then you will pay for what? February. Like that, you have to come reverse way. See, in this both point, we are stuck in here because that 1.5 issue is there. So don't worry, it is because of the error in the question. Your question, they wrongly made 1.5 months. It is actually 2 months. In suggested answer also, they done for 2 months. They haven't not done working answer, but final answer you will get it for 2 months only. So it is a printing error, factory and admin or a month, 2 months because half month we can do 1 month. 1.5 month technically it is very difficult with this data. We have to get the proper ledger. So it is 2 months only. If it is a 2 months, then nothing, no working is required. We have already the data is here. So what about the data, friends? November you will pay in the month of January, so you will get 91,000, friends. December you will get 1,10,500. So that is very lucky. When you do 1.5 months, we identified that there is a challenge in doing that. That is practically we cannot do 1.5 months in this method because that error will come. So 90,500. Now what is the next adjustment, friend, in the question? It's Rajendra. So that is we are being gratuity. Yes, we have to consider the rate. So gratuity. So what is the gratuity we are paying? We are paying from the company on 31st March. So March month you have to consider 7 plus 1, 8 lakh we have to consider. So hope all of you are clear. Then finally, one more thing, we have an EMA. So I think we have taken all the data. Correct, friends? We have taken all the data. EMA already 2023 we are starting. So all this period it will come. So we have taken EMA, this whole adjustment we have taken. So this is a 14 mark question, friends. So 14 mark also good only because 7 mark it will take 10 to 12 minutes. 14 mark will take around 15 to 18 minutes. So you can save time if budgeting if a 14 mark question comes. For your benefit, we have done this question. Even your ICMA material does not release any proper suggested answer. They are given only final answer. But we have done for you proper working, proper clarity. Now you will get closing balance. See, in the regular class, we discussed adjustment. We did problem on adjustment also. What is going to be adjustment? That is, question will tell you if any shortage of cash, we'll go for overdraft. If you have excess amount, we'll deposit. Deposit also in multiple of 1 lakh, 2 lakh, like that adjustment. But in this 14 mark question also, they're not testing that much. So you are very lucky. So opening balance plus receipts minus payments, you will get your closing balance. For me, since I am using Excel, that's all. Just scroll down, my dear friend. So answer is over. Congrats for those who got the correct answer. Believe friends, we have done a 14 mark question. Now you can check your suggested answer also. I have just taken for you. Final answer 3 lakh 80, 6 lakh 90. It will be tallied. Though they don't have no working, but it will be get tallied. So congrats for those friends who got the correct answer. So this is how you have to keep in budget. So in this session, that fixed flexible budget also you have to be very keeping mind, my dear friends. So please take your own time and copy, friends. So we are going to solve one of the previous year question which came for June 2024 exam from activity based costing. You know, any type of ABC question, first step is we have to find out CDR. What is meant by CDR? Cost driver rate. Then we have to find out what is the cost as per ABC. We know up to prime cost, it will be same. Only the overhead percentage only will change. So hope all of you read the question 2B, which came 2024. Anyway, I'll read once again very fast. What is following ABC? The budgeted data is given. We are very lucky, my dear friends. Already the overhead and driver is given in the question. The company produced a batch of 5,200. Material cost is 2.6 lakh. Labor is 4.9. Material order, material movement, setup, all details given. First, they are asking what is the cost driver rate or CDR. Next, they were asking what is the cost of batch. It came for 7 marks. It will take even less than 7 minutes, my dear friends. Let's see how many of you are able to get a correct answer. We'll start. Statement showing computation of CDR. CDR stands for what? Cost driver rate. Activity. What is activity, friends? What all the activity we have? Material procurement, material procurement, material handling, maintenance, setup, quality control, machinery. They given already the amount. Can anyone tell me the amount, my dear friends? 11 lakh 60,000, 5 lakh, 14 lakh 40,000. So we are discussing our question for practice. Now we know next column is driver, which is already given in the question. So we'll eliminate that lane. We'll go directly with what, or we'll go for cost driver also. We'll do better presentation. In exam, if time is not enough, no need for this column. This column will not give you any value. Because already driver is given. What is driver? Number of orders, number of movement, maintenance hours, number of setup, that number of inspection. Now you have to take total driver. What is the total driver or volume? Already given in the question, friends. So 2200, 1316, 16,800. Now you can go for CDR. CDR, you are expert, my dear friends. We have 1, 2, 3, 4, 5. Point number 2 divided by point number 4. Point number 2 divided by point number 4. How many of you got correct CDR, friends? Very good. If you are getting the CDR itself correct, half mark is in your pocket. If you are getting the CDR itself correct, half mark is in. Now, we'll proceed, friends. Okay, now we'll proceed, friends. They were asking us to prepare statement of cost under ABC. We learned in the earlier session that whether it is ABC or traditional method, up to prime cost, all are same. So we'll start. Statement of cost for the batch under activity based costing. I just written a shortcut. So we'll start. First one, direct material. My dear friends, direct material will be given in the question. You have to directly take. What is direct material? Very good. They are given here itself. 2 lakh 60. Direct labor also will be given in the question. We have to directly 4 lakh 90. Generally, direct expense may not be there. So this will be called prime cost. This will be called as what? Prime cost. 7 lakh 50. Now we'll go for add override. Here comes the ABC. Under ABC, you won't take directly, you use what? Activities. Now we'll take each one. What is our first cost? Material procurement cost. First understand, then you can copy material procurement cost. See, first step you want to identify what is the cost rate. What is the cost driver? Number of orders. So you want to check the data. How many orders are there? How many orders are there? 52. Now you have to multiply the CDR number. What is the cost you identified for one order? 527.27. 527.27. I'll take two decimal. So what you will get? 52 into 527. How many of you got this correct? Super. Now, what is the next step, friends? What is the next step? Next, we have to go next activity. First, material procurement is over. Next is what? Material handling. Now, you will be able to get it very clearly. Material handling. Material handling cost. Material handling cost. What is a driver? Number of movement. Sometimes they'll give you different order for confusion. Here, no confusion. Movement is the next item. Sometimes they'll give you the last item under. You have to check corresponding driver and you. So what is the material movement? 36. Now you have to check your driver sheet. What is the cost for one movement? If one movement 367.67, what is for 36? So 367.64. 367.64. So what will come? 36 into 367.64. Like that, we have to find out all the costs. Can you please do my dear friends? Please complete. For me, since I am using Excel, it's very easy. Come on, friends. All the best. Now, my dear friends, we have maintenance cost. And please also ensure this is 8 lakh 30 and 3 lakh 52, not 83 lakh and 35 lakh 20. Come on, friends. All the best. Can you please complete? Let's see how many of you correct. Now, maintenance cost, you have to identify what is the criteria. Maintenance hours. See, maintenance hours they given in different order. So you have to check the order very well. 1380 into what is the cost for one maintenance hour? 115.48. 48 or 47. Small decimal mistake, not an issue. Next, we can go for setup cost. Setup cost, number of setup. Number of setup is 50. So what we have to do, my dear friends? Setup, we have to go for 50 into number of setup. What will come? 798.08. 798.08. Next, we have quality control. What is a quality control? Number of inspections. Quality control comes from number of inspection. So what you will take? Inspection cost is what? 195.56. We have how many inspection? 56 into 195.56. 195.56. Last but not the least, we have machinery hours, which is 48,000 into 1 hour, if I am not wrong, 30 rupees. You will get it. This is your total cost. That's all. Answer is over. 7 mark in your pocket. Total cost under ABC. Hope all of you are clear. Please take your own time and copy, my dear. You can take 2 decimals. That's all. Even 2 decimal not mandatorily required. Congrats for those who got the correct answer. Now, once you look into machinery, I taken wrong column. You will take 3600 into 30. This is how we have to approach. Okay, friends. Congrats.